Welcome back to the European Market Open. A minute to go until the start of the cash equity trading session for this Friday here on your headlines. Global stocks close in on their fourth straight monthly rally. Strong US data and hopes for a spending spree from Joe Biden give investors a tailwind. Jamie Dimon slams the president's tax plans as Wall Street CEOs face another congressional grilling. This as Citi's Jane Fraser sounds a cautious tone on cryptos. And we hear exclusively from the Bank of Japan governor on the nation's long-standing battle with deflation.
It will take time to overcome low inflation once it is entrenched.
So just 10 seconds or so until the start of the European equity trading session. And futures are suggesting some upside at the start of trade. Through yesterday, we were fairly flat, but we did get, we have had a boost to sentiment from some US data, of course, and the fiscal plans of President Biden. Even if they do not survive unscathed through the Washington process, it still sets out in some detail now, or we're looking ahead to seeing that detail. That'll come later on today, but we've had some reporting around that earlier on, which has boosted sentiment, certainly through the Asian session. And here into Europe, it also seems to be boosting sentiment just a little bit through the European session as well. So Asia-Pacific up by 0.8%. US futures point to the upside, not NASDAQ futures, interestingly, which also underperformed in yesterday's session. But we do see Dow futures and S&P futures to the upside, and European stocks opening higher. So the FTSE 100 up by 0.4%, the CAC 40 up by around 0.3%, and the IBEX up around 0.5%. We'll wait for further clarity on some of those banking names that Danny Berger was mentioning in her stocks to watch a moment ago, and indeed keep an eye on some of the tech names after we saw some positivity coming through from some US tech players. Salesforce and the guidance they gave could be something that moves markets, so we'll keep an eye on that. So European equity markets opening to the upside. That is following economic data from the US that did seem to be fairly solid. Meanwhile, the New York Times reports that today President Joe Biden is set to unveil a budget that would increase federal spending to $6 trillion in the coming fiscal year. Joining us now is Bob Parker, Quilvest Wealth Management Investment Committee member. Bob, very good to speak to you. So talk of fiscal stimulus in the US does seem to have lit a small fire underneath global risk appetite under global equities. Is that something that you want to invest into, that fiscal generosity in the US?
I think the answer is yes. And if you focus on where this fiscal expenditure is going, obviously the infrastructure sector is going to be one beneficiary. I think digitalization and education, other beneficiaries. And if one comes back to infrastructure, clearly it's not just sort of building new transport systems. It's also IT infrastructure as well. So I do think that this fiscal program, now obviously it may get amended as it goes through Congress, but I think the amendments are going to be minor. And I think it does underpin, I think, the probability that US growth this year will be closer to 7% than 6%. So, the growth trajectory for the States, although we're going to see some moderation in growth in the second half of the year, it is going to be minor. And the growth outlook, I think, for at least the next 6 to 12 months is very positive in the States.
And I wonder how you play Europe versus the States at this point. I was looking at, Europe has beaten other regions year to date and it beaten emerging markets when it comes to the gains we've seen on the Stock 600. A lot of that, is that already priced in? We had some French GDP revisions for the first quarter, weaker than anticipated, back into, it's a recession, but it's very backward looking and we fully know the reasons for it, of course, and the expectation is now a rebound. But so where does that leave us on the Europe versus US story, do you think?
I think the recent outperformance of European equity markets versus the States is likely to continue. And the reason for that is that we saw, as you mentioned, a weak first quarter in the Eurozone. That continued really into April, notably in consumption and the service sector. What we've seen in May and June is an acceleration in the Eurozone economy, and that's largely due to COVID restrictions being less onerous, and those are going to be relaxed as we go into June and July. So the European economies, and I would include also sort of Scandinavia and the UK here, but the broad European economies, I think, are in the process of accelerating, and most notably in the Eurozone. You're seeing that in the jump in the service sector PMI and also the improvement in consumption. So third quarter growth for the Eurozone, quarter on quarter, could easily be over 3%. So we're in the process of acceleration associated with that. Corporate earnings growth numbers for the second and third quarters are going to be very powerful.
Yes, and I suppose that we'll also keep an eye on the extent to which southern European countries manage to save summer, to use that cliched term. Let me ask you about what's happening in small caps versus larger caps, Bob, and I guess we go stateside for this conversation because I'm thinking about the Russell here. We've seen small caps that keep on climbing. We've seen an increase for 9 months in a row now for the Russell measure of small caps, but it does seem to perhaps be losing a little bit of momentum in terms of the extent of those gains. What's your expectation for this type of comparison? What does it tell us?
I actually wouldn't really focus on small cap versus mid cap or large cap, although I do think that if we have 7% growth in the States this year, next year, I'm not with the consensus that growth slows down to less than 4%. I think that growth can hold above 4%. So that growth background, and particularly with monetary policy only being tightened exceptionally slowly, as we've seen very clear guidance from the Fed, and as we discussed this further expansion in fiscal policy, logically that should be positive for small caps. And I think that taking a 12 months view, small caps should continue to perform well. Having said that, I'd come back to our conversation about who are the beneficiaries of fiscal expansion and the stronger economy, and one comes back to areas where fiscal expenditure is really going to be focused, like infrastructure, for example.
Yes, and that takes us nicely into our next conversation. We'll pick up on the global commodities conversation, and part of that to do with infrastructure, of course, in our next part of the programme. Bob, thanks very much. Stay with us. Bob Parker, Quilvest Wealth Management Investment Committee member, with us this morning, this Friday, on the European Market Open. Coming up then, weighing in on the inflation debate, we'll hear more from our exclusive interview with the Bank of Japan governor. That'll be next. This is Bloomberg.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley to management shakeup, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
The capitulation phase is by.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered.
Welcome back to the European Market Open. It is 9 minutes past 8 this Friday morning, and this is the picture across European equity markets, making gains of around 0.25% to the upside on most of these major European equity markets. Some interesting movers amongst those. Let's get to Danny Berger. She's got a breakdown. Danny.
Anna, I have some kind of head scratchers of movers today, but I want to start with the one that is very clear, make things easy for us, and that's HSBC. They're selling their retail operations in the U.S. to Cathay Bank. They're going to keep a few of the shops just to kind of serve their high net worth clients, but that sale sent their shares in Hong Kong higher, also sending their shares higher listed in London. Now, Nokia is the other one I want to focus on, and this is kind of hearkening back to the big meme stock, AMC, GameStop kind of days. Well, AMC has done really well in the U.S. session, and we've seen a lot of activity around Nokia that would suggest retail investors getting involved. Call options, for example, are very high. They did very well in the U.S. yesterday, so that seems to be carrying over to today. Carnival also doing very well today. This is its 5th consecutive day of gains, its longest winning streak so far this year. This one, again, is a little bit odd because our colleagues had flagged travel as a potential sector under pressure with that June 21st international travel reopening in the UK possibly being questioned now. But this might have to do more with that value rotation we're seeing more broadly. So let me show you the US futures. We're getting that small cap outperforming, carrying through to today's session, while we see NASDAQ futures still higher, but not as high. And for once, the bond market agrees with this better economic picture as we see U.S. 10-year yields move higher this morning, Anna.
Yeah, it does seem to be a broadly speaking, a more positive market, doesn't it, with that U.S. fiscal story, Danny, perhaps lifting even those sectors we might have not expected it to. So travel and leisure, not all that enthusiastic, but it is positive. Danny, thanks very much. Danny Berger with the breakdown there. Let's bring you more now of our exclusive interview with the Bank of Japan Governor Haruhiko Kuroda. He weighed in on the ongoing debate on global inflation.
I think the discussion regarding a possible surge in inflation is particularly relevant to the United States. The Fed emphasized that it would maintain an accommodative stance of monetary policy so that inflation averages 2% over time, and long-term inflation expectations are well anchored at around 2%. I think this policy stance is based on the recognition that it will take time to overcome low inflation once it is entrenched. As you know, this is also a lesson learned from Japan's experience of prolonged deflation. That said, of course, it is true that central banks around the world have been conducted monetary policy while facing significant uncertainties due to the shock of COVID-19. In this situation, I think the appropriate conduct of monetary policy and effective communication are important in terms of ensuring market stability.
So does this mean that we will have to wait longer in countries like Japan and other countries for change in policy?
Oh yes, of course. I mean, each central bank has to adapt its monetary policy to its own economy, price, and financial situations, and so that even if our economy recovers from the impact of COVID-19 pandemic, we expect by the end of this year, the economic activity level would come back to the level prevailed before the pandemic. But as you know, our inflation rate continue to be relatively low, and it will take time to achieve this 2% inflation or price stability target. So that I must say that in that sense, Bank of Japan's substantial monetary easing will continue even after the economic recovery from the pandemic is achieved.
That was the Bank of Japan Governor Haruhiko Kuroda speaking to Bloomberg in an exclusive conversation. We'll bring you more, of course, of that interview through the day. Bob Parker, Quilvest Wealth Management's Investment Committee member, is still with us. I want to ask you about Japan then, Bob, and the policies we're seeing there to generate inflation. The conversation elsewhere seems to be about just how high inflation will go and how temporary it will be. Will any of that push through into Japan and help what has been a very long-fought battle to try and generate some inflation or more inflation?
Well, I think the first point to make is that if you look at year-on-year CPI numbers in Japan, they're still negative. I think the second comment is that whereas the US and European economies, during May and June are in the process of seeing an acceleration, and I think headline inflation, partly influenced obviously by the jump in commodity prices, will be higher. The problem in Japan, of course, is that we have had COVID restrictions reimposed. A number of the major cities, Tokyo, Osaka, have seen quite significant restrictions. And as a result, whereas April data looked as though it was going to improve, May and June data is going to be a setback for the Japanese economy, and associated with that, obviously, some diminution of inflation pressures. Now, if we assume that COVID restrictions are successful, then I think as we go into perhaps the end of the third quarter, the Japanese economy will pick up again, and we could see some improvement in inflation, but it's going to be painfully slow.
Painfully slow, and Governor Kuroda saying that it will take more time. You mentioned their commodities and the impact of commodities on the inflation story, Bob. Let's return to that, because Goldman Sachs has an interesting comment out this morning on the commodities space and suggesting that maybe the Chinese authorities don't have quite the sway, quite the influence, quite the ability to control commodity prices as they might have done in the last build out of Chinese infrastructure. And that's partly because this is also a US story now, with US growth and US fiscal stimulus and US infrastructure spend. What do you see happening to commodities and that balance between, is it China in the driving seat or the US infrastructure push?
I think your observation that Chinese influence over commodity prices is probably diminished. I think that's probably correct. And what we've seen recently is the Chinese authorities trying to curtail long speculative positions, really in two markets, copper and also iron ore. That is obviously very important correlation with the growth in the Chinese economy. So they frankly haven't been that successful in curbing upside in copper prices. So copper went up to $10,500 per ton on LME. It then went back down to about 9,800. And as we talk, the LME price is just over 10,000 again. So with the European economy and the US economy accelerating, clearly that domination of commodity markets by China is clearly diminished. So I think they've taken some of the domestic speculative overhang away from copper and iron ore, but that doesn't prevent the prices going up again.
Okay, Bob, thanks so much. Really good to speak to you. Have a good weekend. Bob Parker, Quilvest Wealth Management's Investment Committee member. And in fact, Bob will continue his conversation with us at Bloomberg, on Bloomberg Radio at 9 a.m. UK time. So I look forward to catching up with him there as well. Coming up on this programme, though, the UK government calls on small businesses to lead the charge to net zero emissions. We will get details next. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
European market open 20 minutes into our trading session. European equity markets heading higher. Let's talk about climate change. And the UK government is calling on small businesses to take steps to cut their emissions as part of the journey to net zero by 2050. This is, of course, in the run-up to the UN Climate Summit in Glasgow in November. Measures the government is suggesting for small businesses, including installing energy-saving light bulbs, switching to cleaner transport, to reduce carbon footprint, all of that in the mix. Let's speak now to Lord Callanan, Martin Callanan, UK Minister for Climate Change and Corporate Responsibility. Lord Callanan, very good to speak to you. Thanks for joining us. So this is all part of the Together for Our Planet initiative. What is it that you're actually offering to small and medium-sized businesses to help them to reach net zero?
Well, it's exactly what you said. It's the Together for Our Planet Business Climate Leader campaign. We want to encourage, help, support small businesses to take steps for them to play their part in reducing emissions. Something like 99% of the businesses, jobs in this country are small businesses, and we want to get them involved in the campaign. We want to help them, give them support, and help them to play their part by small practical steps, as you said, by perhaps changing to electric vehicles, to just even turning the heating down a little bit, to insulating their office, their workshop, etc.
Okay, so if you're a small business and maybe you've done some of those things already, Martin, but you're maybe thinking, well, how am I going to get a handle on Scope 3 emissions, for example? So things in my supply chain or the things that customers do with my product. Are you expecting small businesses to work on that as well?
If they want to. I mean, this is entirely voluntary. I don't want to, we're conscious of the fact that many of these companies are already stretched, and we don't want to put undue burdens on them. So it's entirely voluntary, but we want to offer them the help and support. There's a business climate hub being launched where they can sign up, and we'll give them access to information. Many of the largest companies, NatWest, Google, Scottish Power, BT, they're already signed up to it, and they're offering their help, their resources, the ability that exists in their companies to help many small businesses to take action.
As we head towards the COP meeting in Glasgow, of course, Martin, there's a big focus on all of the global climate change, climate net zero policies, and indeed the UK very much at the heart of all of that. One report today suggesting that the government is considering a carbon border tax to protect domestic heavy industry from offshoring to other locations. I know this is perhaps away from small and medium-sized enterprises, but is that under consideration by the UK government?
Well, it's being looked at in both the UK and in the EU, because, of course, many people have pointed out the obvious fact that if we reduce carbon emissions in the UK, and a lot of that is produced by heavy industry, by steel, by aluminium, etc., and those industries maybe just transfer to other parts of the world, they're still emitting into the same atmosphere, and then those products are re-imported back into the UK again. So there's a big danger that we make ourselves uncompetitive, drive businesses offshore. So this is one way that could be challenged, but of course there are complications about it. There are implications on the World Trade Organization, and from we don't want to look as though we're being protectionist, but it is something that is being looked at.
It's being looked at. Something else that's being looked at is, of course, the heat strategy, and this is about domestic heating in the main. It's been delayed. Why is it still delayed, and when can we expect it?
Shortly is the answer to that. We're in the final stages of drawing it up at the moment. You're talking about the heat and building strategy. It's going through the final processes in government at the moment. It was delayed because, of course, of the pandemic. A lot of resources were put into fighting the pandemic, but we're very keen to get it out as quickly as possible. And we'll also be producing a hydrogen strategy shortly as well.
And is it going to include a ban on gas boilers in old homes? I don't want to steal the headline from whenever it is released, and you say it's coming shortly, but that is something that's being much talked about.
Yeah, there are a number of different aspects to that. We'll be consulting on various options because, of course, we've already taken action for the largest businesses. We've taken action for the private rented sector, and we need to look at what we can do to help and to assist private homeowners as well to also take action.
So if you are trying to encourage homeowners to take action on gas boilers, will there be just a focus on heat pumps to replace them, or will this be about hydrogen as well?
Well, they're the two options. At the moment, of course, heat pumps are available. They're on the market now. You can electrify your heating and decarbonize it using heat pumps. Hydrogen is something around about the middle of the decade. We're doing a number of experiments at the moment. There are some new hydrogen-powered homes that are already in operation. And around about the middle of the decade, we're going to have to take a decision on whether hydrogen really does offer an alternative to existing domestic gas.
Okay, and just briefly, Martin, when you say it's coming shortly, is that weeks, months?
In government, I can't give you an exact date because it depends on all the different processes in government being done, but we certainly hope to have it out within weeks rather than months.
Okay, thank you so much for joining us, Lord Callanan. Martin Callanan, UK Minister for Climate Change and Corporate Responsibility, talking about small, medium-sized businesses, what they can do around climate change and net zero, but also the broader plans the UK government has ahead of that COP meeting in Glasgow. Coming up here on this programme, President Biden's global corporate tax plans will be high on the agenda as G7 finance ministers meet today. We discuss the impact of that plan with the director of Bruegel. Guntram Wolf joins us next. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. Half an hour into Friday's session, and European equity markets moving a little higher, edging upwards as we go through our session. In terms of the sector breakdown, I can see that the insurance sector is the biggest gaining sector this morning. Autos and parts and travel and leisure actually bringing up the rear. And Danny was telling us about, of course, in the UK context around travel and leisure, about how we have had some cautionary words around that around the June 21st deadline. So we'll keep an eye on that. In the insurance space, it's a sort of broad move higher for insurance companies. Prudential, Direct Line, Aegon also all moving to the upside, and Legal and General. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. President Biden is reportedly set to unveil a budget that would increase federal spending to $6 trillion in the coming fiscal year. The New York Times says the proposal includes deficits of more than $1.3 trillion each year over the next decade. That means federal debt would rise to 117% of GDP. Japan is extending its state of emergency in a bid to rein in infections ahead of the Olympics. The restrictions on Tokyo and other major cities will now likely last an extra 3 weeks until June 20th. That's little more than a month before the games are due to start. Japan has seen one of the slowest vaccination programs in the developed world, so far giving just over 10 million shots. The ceasefire in the Gaza Strip may be holding, but the standoff in Jerusalem remains tense. That's according to the Palestinian Prime Minister, who's urging the international community to help fill a vacuum when it comes to peacemaking. We spoke with him and the Israeli Prime Minister's senior advisor.
We're interested in resuming dialogue with the Palestinians, but it won't be easy. And first and foremost, so we've got to make sure that this ceasefire stays in place and is sustained.
The problem is that while we do have a ceasefire in Gaza, the situation in Jerusalem continues to be very inflammatory. The incursions in the Al-Aqsa Mosque continued.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Laura, thank you. Laura Wright here in London. A global agreement that could reshape the tax landscape for the biggest corporations is approaching a crucial first stage, with US President Joe Biden's proposal for a minimum corporate tax atop of the agenda at a G7 meeting of finance ministers in London today and next week.
I have a very good feeling that in just a few weeks we will agree on a revolution in international corporate taxation, namely a reallocation of taxing rights and a global minimum tax.
We are not far from an agreement at the level of the G7, at the level of the G20, and at the level of the OECD.
We are going to see change across 2021 and 2022 in relation to how very large companies are taxed.
The US proposal for a minimum rate of 15% is an interesting and solid basis.
We are very much aligned with the approach of the Biden administration in terms of avoiding this race to the bottom, which is impoverishing all of us.
A host of European voices there talking about the impact that some of these tax proposals would have. Let's speak now to Guntram Wolff, director of Bruegel, for his thoughts. Guntram, we're talking about a couple of different things, but there's a great deal of overlap. One is a global minimum corporate tax, and the other is allowing businesses to be taxed on not just where they declare their profits, but maybe some other measure, for example, around sales. The impact of this on big US tech companies is perhaps more obvious, but tell us about how you think that kind of tax proposal, particularly the latter one about taxing maybe something that doesn't look like profits and where profits are made, how will that impact on various parts of Europe?
Well, I think, first of all, this is really a welcome development because there has been way too much tax manipulation or tax evasion through sort of creative allocation of profits into places where tax rates are very low. And what the leaders really want to achieve here is they want to make sure that these kind of tax models, creative tax models, cannot easily exist anymore. But on the contrary, that companies get taxed and that the tax revenues get fairly shared, more or less to fairly in relation to where basically the sales or the profits are being made. And here you see already it's tricky. Is it the profits? Is it the sales? What is the basis? But I think they really, the leaders really want to move away from a system where you manipulate essentially where the profits are happening. We know that some companies have been able to sort of allocate their entire profits to a country like Ireland, and all of a sudden in that country, there's huge profits, even though there's no real activity there.
So when we hear positive commentary around these proposals from the likes of Germany and from France, Guntram, is that because they're making the assumption that they might lose some of the tax that they would previously have made from BMW or from LVMH or from other autos and big luxury names, but on the other side, they will gain some of the tax revenue from US big tech? Is that the sort of juggling act that European countries are dealing with?
Oh, absolutely. I think exactly that's exactly the point. I think the first really important point is they want to get rid of tax havens where lots of the profits are allocated. Then, of course, you're right. There may be some tax revenues lost on BMW for Germany, but even companies like BMW, big German blue chip companies, they also use these kind of constructions. So let's not fool ourselves. It's here really about trying to match corporate tax profits more closely to where these companies actually are active and where, also from a tax logic point of view, where they actually benefit from the state services, right? From the rule of law and all of that. I mean, that's where they should be paying the taxes. And that's where I think the proposals are going.
What do you expect to be the response from European countries? We heard a little in those clips there from the Irish finance minister, who seemed fairly resolved to the idea that something is changing. But what would you expect the pushback to be like from the likes of Ireland, from the likes of Portugal, other places that have corporate tax rates that are maybe below the 15% global minimum that's being discussed?
Well, the EU has always found it extremely difficult to agree on any tax matters because there's a few countries that oppose these kind of minimum tax rate deals. But I think this time with the US president also firmly behind this, the dynamics, of course, change. And, I would expect that the minimum rate will still be debated further. And I wouldn't be surprised if in the end we end up with 12.5%, for example, which would then be very much in line with the Irish rate. But even that would be a huge improvement over the current status quo.
Why do you think it is that we see, Guntram, so many shareholder activism groups getting very animated about various issues on social justice, and yet this is something that has not been picked up in that regard? You mentioned businesses that rely on maybe local infrastructure in certain jurisdictions but pay very little tax in those jurisdictions. There's some tax campaign groups that have obviously been fighting this corner for a very long time, but it doesn't seem to, shareholders seem to have been happy to let this happen. Why do you think that's been the case?
Well, I think it's a very good question. I think one important dimension for the NGOs is that this issue is actually quite complex. I mean, it's a very technical issue. There's also always the fear that if you get it wrong, you hit wrongly some, just normal mid-sized companies domestically, right? And so there's always a lot of worry that even SMEs could be affected by these kind of constructions and all of a sudden have to change massively their tax accounting system, even though they don't do anything wrong, so to speak. So I really think it's the technical issues that make it very difficult for sort of activists to be extremely present. But I would say this topic has really been top of the news in the last couple of years, also thanks to the work of some scholars, French scholars often, that really work in this tech space.
Yeah, and there certainly have been those voices calling for this, I acknowledge. Do you think this whole thing has been brought about, Guntram, by the change in the US administration, by the fact that the Biden administration is more amenable to this idea than the Trump administration? And if so, why do you think that the US is going along with this?
Well, I think the reality is the EU alone has not been able to do these things, and in the EU we are too divided. So the change in the US administration certainly was a key requirement for getting this consensus. And well, why is the Biden administration behind this? Well, I think one big dimension certainly is that Biden wants to spend much more, and we just heard. I mean, he's going to increase federal spending quite substantially, but you can't just continue doing that on deficits. At some stage, you have to raise taxes, and if you have a social agenda, you don't want to raise the taxes on labor income, right? You don't want to tax the average worker, so you want to go after the big profit, and that's the companies. And these companies have been difficult even for the US to tax.
Guntram, thanks for joining us. Really good to speak to you. Guntram Wolff, the director of the think tank Bruegel. 8:40 here in London. Coming up on this programme, will the traditional office-based working return after the pandemic? Recruitment expert Hayes has surveyed professionals across the UK about the 9 to 5. To find out the answer, stay with us for our conversation. We'll get some more details from the company's UK and Ireland managing director next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back to the European Market Open, 8:43 here in London. European equity markets moving to the upside. Banco Sabadell down by 2.7%, this over in Spain, of course. Cost savings announced under a new strategic plan today, but some analysts, notably at Jefferies, suggesting this may require additional convincing for investors, and you see the stock down a little bit this morning in a broadly more positive market, a market that is getting a bit of a boost from fiscal spending plans in the US. More on that later in the day. Let's turn our attention to the UK now. It has been over a year of working from home for many. Now companies are rethinking the office-based model. So what is the future of work after the pandemic? We return to the way that work is shifting. Recruitment expert Hays has surveyed professionals across the UK to find out, and the results show the growing importance of flexible working. Nearly half of the employees think that a hybrid model is the way forward. It is even more important for employees who are more likely to move to a job that offers a mix of office and remote work. Joining us now to explain all these findings, Simon Winfield, who is the Hays UK and Ireland Managing Director. Simon, a very good morning to you. Thanks for joining us. So, yeah, the top line from this, it does seem to be that there are many questions being asked about the traditional 9 to 5. But when I look at the breakdown of those surveyed, and you've surveyed plenty of professionals across the UK, it does seem as we don't necessarily have a clear path forward, do we here, Simon? Because, you know, there's sort of 30% or so people saying, yes, it's the end of the 9 to 5, a similar amount saying, no, it isn't, and a similar amount saying, we just don't know. What do you take away from this research?
Yeah, morning, Anna. And yeah, you're absolutely right. I think as many people are convinced that it is the end of the traditional 9 to 5, there's still an awful lot of people that aren't really sure. So, yeah, the jury's still out, I think.
The jury's still out. When you talk to your clients, when you talk to businesses that are recruiting, what are they saying about this? Are they waiting for everybody else to make the first move? Are they following these conversations closely, or are some stepping out?
There is a fair bit of that going on, to be fair. I think some companies have come out very early and clearly and said, look, everybody's going to be working from home, or you know, the reverse is true and everybody's going to be working in the office. But I think there's an awful lot of people sitting and watching and seeing what other people are going to do. You know, not only we have an interesting view, not only across, you know, our broad client base, but also our own business and what we're thinking about doing here. And yeah, I still think there's a fair degree of uncertainty.
Yeah, what's the Hays approach then?
Yeah, well, the Hays approach has been, you know, as much as we've worked with our sort of leadership teams to get their views, we've also reached out to every single member of our staff to get their own opinion, you know, on what they think is right. And you know, for us, it's an interesting challenge. We've got to make sure that we take the views of all of our people on board, but also try and land on a position that's optimum for the business and the performance of the business. We've got some interesting data back from that from our own staff, and we're in the middle of another survey with a group of people at the moment. But we'll hopefully tie in our own sort of balanced working agreement in line with the government guidance on the 21st of June.
It's interesting, isn't it? After a whole year, more than a year, much more than a year in some people's cases of working from home for many people, I wonder how much enthusiasm there is for it, because for some people they seem to find a lot of positives, but also there are negatives, and the inability to maybe keep work contained in the work hours, or maybe your own personal domestic Wi-Fi isn't that reliable. I mean, what kind of feedback are you getting on just how desirable it is to work from home now?
Yeah, we've had mixed views from all of our staff. I think some people have thrived. You know, the lack of commute has probably meant they've been more productive. You know, they're not spending 3 hours a day commuting. Some of our staff have really struggled. You know, if you're living in a sort of shared flat in the middle of a big city with, you know, 3 other people, you know, getting your own personal space to do work is a bit...
Good morning, traders. Hope you had a good night. Straight to business, I'm going to place an order to buy Japanese yen. The price I'm looking to buy, 109.886. If you're looking to trade today Japanese yen, here is your chance. You can buy Japanese yen, and the price we're looking to buy, 109.886. Okay, guys. For our strategy, you need to go to company.co.uk, and if you want to trade other pairs, not just pairs that you can see on the screen, after you will purchase strategy, you will learn how we trade, and you can trade other pairs, Forex pairs, you can trade Bitcoin, you can trade stocks, indices, whatever you like, anything you like. The most important things, these companies or securities supposed to be very tradable. Lots of people, lots of companies supposed to buy. The spread supposed to be small, really tiny, yeah, between buy and sell. Difference supposed to be not really big. This is one tip for you guys. Okay, I'll speak to you later, guys. So order still in, so you still have time to place an order. Stay safe.
Through the trials and tribulations of lockdown, and that has come on pretty strong. But we're certainly seeing increased hiring activity as we come out of the lockdown at a pace. And
so
that's
that recovery,
some interesting behaviours.
Yeah. So that recovery and that war for talent you describe, I mean, last time we heard from Hayes that the fees continued to recover in your last quarter. Should we expect upward momentum for fees to continue, given what you described there?
Yeah, I think certainly from a permanent point of view, we're very optimistic about the next quarter. We then come into the summer months, which traditionally are a little bit flatter for us, but certainly we're optimistic about the next quarter for sure.
Simon, thanks so much for joining us. Really good to speak to you. Simon Winfield, the Hayes UK and Ireland Managing Director, giving us the results of the research they've commissioned and also the Hayes experience on the way that work patterns will shift or not post-pandemic. Coming up here on this programme, we'll get back to the markets, a record low for the Turkish lira against the dollar. We'll speak about the reasons behind the move with Bloomberg Market Live's Ven Ram. He's with us next. This is Bloomberg.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European market open. 53 minutes into our trading session here in Europe, and European equity markets up increasingly so, actually, as we go through Friday.
Okay, traders, we're in. As you can see, position opened on Japanese yen, long position at 109.886. Okay, all of you guys who decided to trade Japanese yen today and decided to copy my trade, stay with me. will go through until the end of the trade, and we will collect the profit. Okay, I'll speak to you later, guys.
It's not clear what the particular impulse for the next week for today's move is. But, you know, we have seen a change in guard, as you mentioned. We have seen a frequent change in guard, and we had one earlier this week with the central bank deputy governor this time being changed, and all that is telling on the risk premium on the lira. And, you know, at the moment, the lira is trading at a considerable risk premium against where it should be trading, meaning that all the bad news is pretty much in the price. But as far as the investors are concerned, it's an ongoing concern because inflation is running at 17%, and you've got the policy rate just about 19%. So there's not much of a real rate advantage that the investors get by staying invested in the lira, and that's why the currency is jittery now.
And let's talk about gilts, another area of the market I know that you've been looking at in great detail of late, Ven, looking at your notes over the last 24 hours. We heard from Gert-Jan Vlieger of the Bank of England, who was talking about the economic recovery in the UK, and he certainly got people thinking about just how soon we're going to see rate hikes in the UK. I mean, not very, but it's got that question. It's pulling forward the date, I suppose, for markets. Is that what's moving gilt markets?
Yeah, definitely that's overhanging sentiment in gilts. But I do think that the gilts are a bit too complacent at the moment. We saw a bit of follow-through action yesterday after his comments. But if you look at the gilts complex, particularly the front end this morning, they're not moving a whole lot. And I think that the markets are a bit too complacent about a rate hike, given all that's happening in the UK. As you know, there's been considerable vaccination progress. We are on track, at least we seem to be on track to opening up in the summer. And the economy is going to grow more than 6% by all indications. And yet you've got the front end gilt yields at just about 6 basis points, which is paltry. And I think that there's only one way gilts can go, and that's for yields to go higher.
Okay, Ven, thanks very much. Really good to speak to you. Have a good weekend. Ven Ram, Bloomberg's Markets Live currency and rate strategist. Thanks very much for being with us here on the European Market Open. That is it for the European Market Open for this week. Its surveillance early edition is up next. The European equity market picture does look positive. Insurance companies and industrial goods and services getting the best of the gains. To the downside, autos and auto parts. We see broad gains across European equity markets. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
American leadership really matters. If we don't get our academic act together, we won't be a leader in 20 years.
The president's jobs plan is all about competing with China.
When you talk about cryptocurrencies, like Bitcoin specifically, buyer beware.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition on this Friday, the 28th of May. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Biden's $6 trillion budget. A report suggests the U.S. president is set to unveil a spending plan that would drastically increase federal spending in the coming years. Now, his decade-long plan will be released today. Bitcoin cannot be stopped. ARC's Cathie Wood says that the cryptocurrency could never be shut down, as the BOJ's Haruhiko Kuroda adds his voice to the chorus of central bankers talking down digital currencies in an exclusive interview. And Europe and the U.S. slam piracy in Belarus. The EU points the finger at Russia's ties to Minsk after the arrest of a journalist in the Belarusian capital. We'll speak to the president of Lithuania shortly. Now back to the markets, though, and U.S. equity futures moving higher today after Thursday's solid economic data. Now, markets also focused in on Biden's federal spending plan. So let's get straight to our Danny Berger with all of the market moves. Danny, first of all, happy Friday. And how are markets really digesting all of that this morning?
Happy Friday, Francine, and happy Friday for markets, too. It is all about the rotational story today. Earlier in the month, we had thought, okay, maybe growth is back, maybe big tech is back. But with these economic cues, be it the better jobless claims, be it more spending coming out of the White House, we're seeing, again, this phenomenon where small caps value, they outperform the bigger growth names. That happened yesterday. Russell 2000 ending higher by more than 1%, while the NASDAQ fell. It's not as extreme this morning, but it's still the same narrative. You want to go in, you want to buy those cyclically sensitive stocks that are going to benefit from more government spending, from more people getting into the workforce. We're seeing a similar trend happening in U.S. 10-year yields, which have moved higher over 1.61%. Probably one of the first days in a while where we're having the equity market and the bond market in agreement. One asset, though, that's not in agreement necessarily is the dollar, slightly higher this morning. You'd think with more spending, you'd get a weaker dollar. Not necessarily the case as we are with month end, considering U.S. markets are closed on Monday. So perhaps some of that window dressing, month end buying, giving a bid for the greenback. Francine.
The other big event, of course, for Wall Street yesterday was the second day of testimony in front of lawmakers. I mean, they spoke about crypto, they spoke about ESG, they were really kind of grilled on everything.
Yeah, it really ran the gambit, and I think it just kind of shows how bankers and executives at the lenders continue to be in the hot seat. I mean, no real big fireworks, which was a positive for banks. All their stocks ended higher yesterday, but Jamie Dimon, I would say, was probably the most outspoken among any of the CEOs. One of the really big criticisms he expressed was over Biden's tax plan, and this is what this is about, saying it would be detrimental to a lot of companies. It would push a lot of capital overseas. He also had some comments on the labor market, saying Americans aren't ready to return to work because they have a lot of money. And as you say, we got some talk on not just cryptos, but Archegos as well. That was a topic that was kind of blatantly, obviously missing from the testimony in front of the Senate. David Solomon took this one about Archegos, which of course is interesting considering Goldman Sachs highly involved in that saga. He said, look, some of the focus there is probably a good thing, arguing that it makes sense to update disclosure rules so you do have things like total return swaps reported to authorities. So that was one of the things he said. Him and Diamond also expressed caution around cryptocurrency, Francine.
All right, Danny, thank you so much. Thanks to you, actually. I'm always on meme stock watch, Danny, and I know AMC, I was looking at some of the stats. It was, it gained 1,150% since January, so we'll get you back to talk about the meme stocks. AMC definitely on the move. Now, Russia denies entry to 2 European airlines because they plan to avoid flying over Belarus to get to Moscow. Air France and Austrian Airlines have had to cancel services after their flight plans were rejected by Russian authorities. Now, some airlines are avoiding Belarusian airspace in protest after the government there forced a Ryanair plane to divert and land in Minsk on Sunday. Ryanair flight 4978 was traveling from Athens to Vilnius in Lithuania when a fighter jet forced it to change course. Aboard was a prominent Belarusian blogger and dissident Lukashenko critic Roman Protasevich, who lives in exile in Lithuania. Now, he and his partner were arrested in Belarus. Protasevich was put on the Belarusian terrorist list last year, and he faces serious charges. The move prompted Western leaders to criticize the Belarusian government. One of the most outspoken condemnations, of course, came from the Lithuanian president, Gitanas Nausėda.
The time of rhetorics and vocal expression passed. It's over. We need clear actions in order to change the pattern of behavior of this very dangerous regime.
Well, joining us now from Vilnius is the Lithuanian president, Gitanas Nausėda. Also with us is Maria Tadeo from Brussels. Mr. President, thank you so much. We all listened to your very impassioned speech on Monday at the EU summit. Do you think the EU has done enough so far to actually try and punish Belarus for what it's done? Or do they need to be locked down of the international payment system? Do they need to be frozen out of financial markets?
First of all, I would like to say thank you very much to my colleagues in European Council, because the understanding of the colleagues what happened on the weekend was very firm and very clear, and we just understood how dangerous the regime is. We are the neighbors. We understand and we see this regime with the open eyes. And what happened on weekend, we can call it not only the act of state terrorism, but also this is a kidnapping of 2 persons in the middle of Europe and hijacking of a civilian airplane. So Roman Protasevich just was detained in the middle of Europe. And of course, this action created and put in danger the lives of 120 passengers from the 18 nationalities. So we needed the decisive actions, and I think those actions were done. First of all, demand to release Roman Protasevich and Sofia Sapega, then to close the airspace of European Union to the Belarusian airlines, and of course recognize the Belarusian airspace as totally unsafe for the airplanes from Europe. And we would like to talk also about possible targeted economic sanctions to this regime, which are highly needed in order, probably we will not scare the dictator in Belarus, but at least what we can achieve to show the interconnection between his actions and consequences.
Mr. President, tomorrow there's also a meeting between Vladimir Putin and President Lukashenko. Do you expect anything to come out of it? Will Russia try and temper what happened?
What is happening last several years, this is the efforts of Russian government to swallow Belarus as an independent state. And I think they are quite successful in doing this, especially after the elections of August 2020. And I think now the situation for Mr. Putin to elaborate and implement this plan of unification of both states. He has very favorable conditions to do this. And I think that he will use this opportunity to just to swallow the independent state of Belarus. Of course, we can discuss how independent is the state at the moment. We do not see any big signs of independence, but anyway, I think it's very dangerous geopolitical process going on near to the European Union borders, and we should be aware of this.
And sir, just to pick up on that point and make it clear, essentially what you're saying is that Vladimir Putin is looking for Crimea 2.0 to take over the country and adhere the country to the Russian Federation.
Yes, absolutely right.
Okay, okay. Well, on that point, you know, I also wanted to ask you. You say you've mentioned the word terrorism, hijacking, kidnapping of people. Your country, Lithuania, has become a big hub for critics of Lukashenko. I wonder if you're in a position to guarantee their safety. And of course, I'm also thinking, in particular, of Svetlana Tikhanovskaya. Can you guarantee her safety in the country?
Yes, you rightly mentioned that Lithuania is a safe harbor for opposition leaders, for the journalists, from the people from the civil society of Belarus, and also the journalists of free mass media. And we do all we can in order to protect them, to give them good conditions to live and to work. But of course, the regime tries to intimidate them and tries to threaten them. And probably one of the elements of this recent event was just to show to the people, to the journalists, to the opposition, look, we can catch you no matter where you are, in the air, under the water, or somewhere else. And I think this is a reason behind, and this is the logics behind. But I see only one possibility to change the pattern of behavior, just to show that the time or period of deep concerns or other rhetoric expression is over. And we need actions, because otherwise we don't have the tools to influence or to have any impact on the behavior of this regime.
And sir, of course, you know, this is a situation in Belarus. You talk about this ultimate goal to annex the country, but we're also seeing Russian troops very close to Ukraine, for the country sitting on the eastern border. Of course, this is always a concern. So what are you hoping comes out of the NATO summit that's coming up?
I think this is a very important issue we should discuss in NATO summit in the mid of June. Because we see a lot of elements of increasing tension in the region. And of course, Belarus is only one of them. Yes, you mentioned the location of Russian troops and other factors, and so also some tension in Moldova, in Georgia, in other countries of Eastern Partnership. So I think we need to have the clear signals from the nearest summit in Brussels that NATO as organization is fully aware of what is happening in this region and is ready to take those challenges with corresponding measures and corresponding actions.
Mr. President, given what happened on Sunday, what are the dangers of President Lukashenko having a nuclear plant?
Unfortunately, this issue was also under discussion on Monday, and I was the initiator of this discussion. Yes, all that time, Lithuanian authorities were very sensitive to this issue, not only because ecological, economic, energy market reasons, but also because of geopolitical reasons. And I see what is happening after the events of last weekend. We should treat this nuclear power plant, this facility, not only as unsafe source of generating electricity, but also as a geopolitical weapon in the hands of the dictator Lukashenko. And yes, he having this facility in his hands can use it just as blackmailing instrument for the European community. And I think we have to do all we can, all what is in our hands, in order to prevent the electricity from Belarus going to the energy market of European Union. And so far, we don't have the technical decisions by 100% how to stop this electricity from flowing to the continental energy market of European Union. But I think we are now in the process of synchronization of our energy markets, and we will finish this project in 2025. And then we will be able to protect ourselves from the unsafe electricity from Ostrovets. This is very important, not only from the technical, economic point of view, but also geopolitical point of view. We cannot finance unsafe facilities near to the European Union border.
Thank you so much, Mr. President, for joining us. Lithuanian President there, Gitanas Nausėda, and our Brussels reporter, Maria Tadeo. Now, Smart Conversations continue on Bloomberg Surveillance, the early edition. Later on in the program, we speak to Kering's Chief Sustainability Officer, Marie-Claire Daveux. But up next, we speak to the Global Chief Economist of HSBC, Janet Henry. We'll talk about the U.S., we'll talk about the budget, and of course, we'll talk about taxes as well. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, sentiment was boosted by a New York Times report that President Joe Biden is set to unveil a budget that would increase federal spending to $6 trillion in the coming fiscal year. If such plans were to go ahead, the U.S. would run deficits above $1.3 trillion throughout the next decade. Now, Biden is expected to outline those plans today, the Friday before the Memorial Day weekend. Well, joining us now to talk about all of this is Janet Henry, HSBC Global Chief Economist. Janet, I mean, the number was actually, first of all, good morning, but the number was actually quite, if not surprising, it kind of reminded you of how much the U.S. is actually willing to do. What kind of an economy will we be left with in the U.S.?
Good morning, Francine. Well, I think it's a continuation of what we've seen, obviously, since the Biden administration took over. And that is that he's going to continue to do what he can on the fiscal side. Now, as much as we hear that 6 trillion number, remember that is aspirational. When we're talking about an annual budget, really that's set within Congress. You know, maybe we get half of that, maybe there's some tax increases, who knows? But we know that for the next 2 years in particular, until the midterm elections, while he has that narrow majority, he's keen to push through as much as he can on the fiscal side. We obviously had the impact that's hitting in March and April, and that this is happening at a time when obviously the Fed had already promised to be patient regarding inflation. So it's a big experiment for an economy that, one, entered the pandemic in better shape, two, had a milder recession, and three, is already bouncing back more quickly. And this is why there is this greater element of risk in the US than there is elsewhere regarding inflation.
But is there a danger of, you know, inflation being rampant, but also overheating? And as long as if you have a fiscal policy that's, you know, really pretty incredible, if monetary policy doesn't do any mistake, is it going to be a good concoction?
Well, this is where there's so much uncertainty. And obviously I'm an economist and we're always accused of being two-handed, but this is even something that the currency tends to grapple with. It's kind of, yes, we're going to have another big budget, even if we only get half of what is suggested. We're going to be running bigger budget deficits. That will trouble some in financial markets. But actually, if we have much stronger growth in the US, and if inflation is a little bit stickier, perhaps, than the transitory mix than the Fed is pointing to, then we could get interest rate rises coming through earlier. And this is what means that the US is in a very different position to elsewhere. Again, we need to go back to where we were pre-pandemic, when we were already pretty much close to the zero bound. Everywhere's now at the zero bound, and the Fed, and now with the fiscal support coming through, has been trying to shock us out of that lower than expected inflation, lower than expected interest rates, and we have to see how it pans out. And if political intervention in labour markets means that we get a labour market response that we're not forecasting, then it would mean that the Fed would have to respond more quickly than certainly we're forecasting.
Janet, will this spur other parts of the world to do more on the fiscal side? And actually, you know, we also had an interview with the U.S. Commerce Secretary who was talking about semiconductors, which we'll talk about in a second. But she also said that basically what they're trying to do is to become more competitive. Does, you know, $6 trillion in budget make the U.S. more competitive globally? And is it, I guess, you know, a negative for the rest of the world?
Well, only time will tell. As you say, even if it is 6 trillion, or indeed if we go back to the other numbers that we're talking about over the course of the next decade, as a share of GDP, it's a lot smaller over the next 10 years than the stimulus package than we've had so far at the start of the year. Now, remember, this infrastructure plan is in the broadest possible sense, because it involves a lot of human infrastructure. It involves things like childcare. And obviously, there's lots of questions regarding labour market participation. Maybe if there's better childcare and greater skills training, more people can come back into the labour market and meet some of these skills mismatches that are in place to some degree. That potentially could make the US more competitive. But you mentioned semiconductors, and indeed a lot of other sectors where, yes, there are shortages at the moment, but also we are seeing announcements on a lot of investment. Now, it's going to take some time for them to hit the economy, whether it's in 2022 or beyond. But in some of these sectors, you may ultimately end with more capacity, but there are a lot of considerations at play, whether it's geopolitical or national security reasons, as well as, you know, a realization within certain countries that, you know, they don't want to be totally reliant on some of these global supply chains for some of these really important sectors.
Janet, well, I mean, we did speak to the U.S. Commerce Secretary, Gina Raimondo, about this. I mean, how much investment? See, I know that I understand that semiconductors are difficult, but is it just political? Are we going to see them, the U.S., but also certain parts of Europe, just ramping up? Because otherwise, this really affects, you know, the supply chain even more than the U.S.-China spat.
Well, I think what we're going to see broadly on the investment front is certain areas that have been very strong. I mean, one, investment spending globally has been less bad than feared at the start of the pandemic. It has been quite resilient, and a lot of it has been areas of tech, nearly massive resurgence in investment in whether it's computers or software or a lot of tech related, as well as some of those other sectors like the auto sector that again took us a bit by surprise, having halted production in the early points of the pandemic. But I think it does mean we are going to see globally, whether it's Taiwan or mainland China or the US or Europe, everyone is announcing bigger investments in these sectors. And we just can't call, as I say, the timing as to when suddenly we're back at a glut. We've got to remember global semiconductor sales still aren't quite back where they were in 2018. It was a consequence, some of it, of the weakness of the demand that followed it. But different factors, as you highlight, are at play now. It's not just a global capacity issue.
Janet, thanks so much. Janet Henry there of HSBC stays with us because we have a lot more to talk about, including our interview with Governor Kuroda of Japan, and we'll talk about the ECB. In the meantime, let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The plan to end England's pandemic restrictions on June the 21st is now in doubt. That's according to Health Secretary Matt Hancock. He is warning that the COVID variant first found in India now makes up as many as 3/4 of all new cases. He says lifting the rules will only happen if it's safe. There is another twist in the Gates divorce when the pair announced their surprise split. They said they would not be changes to their $50 billion foundation, but now the boss of the organization says he is looking at ways to strengthen its long-term sense of sustainability and discussing what steps Bill and Melinda might take. He says no decisions have yet been made. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now we'll have plenty more, of course, on markets. Our Danny Berger is also looking at meme stocks. We had some good economic data of the U.S. that's giving a lift to the market. This is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming,
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Biden's $6 trillion budget, while reports suggest the U.S. president is set to unveil a spending plan that would drastically increase federal spending in the coming years. His decade-long plan will be released today. Bitcoin cannot be stopped. ARK's Kathy Wood says that the cryptocurrency could never be shut down, as the BOJ's Haruhiko Kuroda adds his voice to the chorus of central bankers talking down digital currencies in an exclusive interview. And as the fashion industry tries to move away from the take, make, waste model, we speak to Kering's Chief Sustainability Officer about the company's circularity model. Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition on this Friday, the 28th of May. I'm Francine Lacqua here in London. Now let's get straight to our exclusive interview. While the U.S. contends with inflation running hot, consumer prices in Tokyo have fallen for a 10th straight month. Now, the world's largest city has been under a state of emergency as Japan looks to control COVID before the Olympic Games. And yet, the Bank of Japan Governor Haruhiko Kuroda was confident about an economic rebound.
We expect by the end of this year, the economic activity level would come back to the level prevailed before the pandemic. But as you know, our inflation rate continue to be relatively low, and it will take time to achieve this 2% inflation or price stability target. So that I must say that in that sense, Bank of Japan's substantial monetary easing will continue even after the economic recovery from the pandemic is achieved.
Well, Governor Kuroda also weighed in on the Fed's problems with keeping inflation under control, agreeing that it was likely that the spike in prices would be transitory. He said that the U.S. could turn to Japan as an example.
The Fed emphasized that it would maintain an accommodative stance of monetary policy so that inflation averages 2% over time, and long-term inflation expectations are well anchored at around 2%. I think this policy stance is based on the recognition that it will take time to overcome low inflation once it is entrenched. As you know, this is also a lesson learned from Japan's experience of prolonged deflation.
Well, that was Governor Kuroda. Janet Henry of HSBC is still with us. Janet, when you look at, I guess, one of the things that we've been talking about for the last 2, 3, even 4 years was that everyone was worrying that Europe would become like Japan structurally, but also, structurally, really. Are we now moving away because of the fiscal spending, or is there a danger that actually what the EU recovery plan has in place is just not enough?
I think there is a concern that perhaps there isn't quite enough in there. Obviously, Europe has made tremendous progress over the last year in terms of coming up with that plan, and it is going to have a meaningful impact. And remember, even in Europe, it may pale in comparison to some of the numbers coming out of the US. But we have seen the announcement of considerably larger budget deficit projections even for 2021. But yes, there is a concern that it might not be enough. We only have to look at the ECB's own forecasts for 2023. Their own projections are still significantly below 2%. And even if they revise them up in June, there will be. And this is why the US is just such a contrast because of this policy experiment that's underway there.
Jen, is there anything that actually the US or Europe could learn from Japan?
I think the US is learning. from Japan. And I think that's why they are trying something different. You know, if you look at Japan, if you look at Europe, and actually more recently, you look at the US, they've all been at the zero bound. And, you know, other experiences have shown it's very, very difficult to get out of that, even on negative rates. Sweden, for totally different reasons, finally got out of negative interest rates, you know, once you've gone into them. So what the Fed has been trying to do is to engineer a regime shift that we keep hearing so much about. And that's what is this experiment over the course of the next couple of years, because otherwise they would be locked in the zero bound. So you could say, is there anything to learn from the US? They know that the US is promising to do something totally shocking to shock inflation expectations higher. Yes, people are concerned that maybe they'll do too much, especially with that fiscal backstop and even bigger fiscal support that's come through subsequent to the Fed adopting that average inflation target. But I suppose a lot of people would say the jury's still out. Maybe it will be in years to come that we will, you know, see other countries start to follow suit. But in Europe, we have seen a significantly bigger fiscal stimulus than I think a lot of us thought likely even a year ago.
So, Janet, I mean, I don't know whether you track vaccinations because we're all virologists or you worry about variants, but if you look at the recovery in all parts of the world, is it necessarily whoever's doing better now will do better in 6 months, or can that all change, and what does it mean for your forecasts?
I think that can all change because actually, you know, if you think about the recovery from the lows last April, it's been very much led by Asia. The strongest bounce back in production, in trade, has all been in Asia. And subsequently, you know, Europe was very much lagging in that. But what we've seen since vaccinations rollouts have started to come through, even if it's been slower than the US and indeed the UK, there is now much more optimism, not necessarily in the hard data, but in all of the survey data that we're seeing for the second quarter. But in parts of Asia, we are now seeing, you know, renewed rises in cases and actually renewed restrictions being put into place. And it could be a much slower improvement that comes through in some of those economies. And likewise, COVID is a bit more of an issue still in terms of rising cases in Latin America. So yes, it is having an impact on our forecasts, but you know, there's a lot of different moving parts. The commodity producers are still getting some real income increases, and you're not seeing the same strict degree of lockdowns that you've seen in certain countries in Europe or in Australia and New Zealand. But the vaccination rollout does mean that the pace of improvement in some until recent outperformers might be a bit less from here.
Janet, thanks so much. Janet Henry there, HSBC Global Chief Economist. We're also, I think, just getting a viewer question about aging population, so we'll have to get Janet back on. Now, turning to stock markets in the U.S., and the meme stocks are back, at least when it comes to AMC. It's more than doubled in price over the past 4 days, and it's up again pre-market. Joining us to discuss all this is Danny Berger. Danny, I couldn't believe from the start of the year, gaining some 1,150%, and again, it's the Reddit crowd.
Yeah, it really is, and it's kind of interesting because I feel like it's been bubbling underneath the surface for a lot of this year. You see days where AMC does really well. Okay, Reddit is back, but it's kind of back in a way that it wasn't even this strong before. We're seeing it up 8%, 9% pre-market. You said it's already doubled in price so far this week, and we're seeing on social media things trend like hashtag AMC strong, hashtag Occupy AMC, and people really celebrating a new high in their market cap on Reddit. And another telltale sign of the Reddit crowd diving into AMC, let me take you into the terminal for this one, and that's options. We know retail investors really like short-dated options around AMC. So I just kind of want to show you what's been happening here, because again, it's exceeding the way it was at the height of sort of the meme stock craze. So, you know, we get all these really elevated options interest. And if I were to show you this part of the chart back here, I mean, this would look extremely high, but now that is being dwarfed by the action yesterday. More than 3 million options trading hands. That's more than double what it was at the height. This also means that a lot of these are bullish options. Short sellers are getting burned. Market-to-market losses look about $1.3 billion million for them, according to S3 Partners. And for some reason, it mostly is concentrated around AMC. We've seen GameStop do well. Nokia is trading up higher in today's European session. But it really does seem that the concentration now is being put on AMC, kind of becoming the poster child this week, supplanting GameStop. Maybe it has to do with the fact that the CEO of AMC in their last earnings call really embracing the Reddit crowd, saying, hey, these are the same people that come to our movie chain. So the fact that they're enthusiastic is just good business news for us.
Yeah, Danny, thanks so much. I know this story will run, and we'll continue looking at it. So, great work, as always, unveiling some of these meme stocks. Danny Berger there. Now, Gucci owner Kering unveils its circularity strategy. How does the fashion industry square mass production and sustainability? Up next, we speak to Kering's Chief Sustainability Officer, Marie-Claire Daveux. If you have any questions for her, just IB plus TV Go. This is Bloomberg.
The power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley. It's a management shake-up, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
The capitulation phase is by.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered. Expect clear, concise conversation on Bloomberg surveillance.
There's no vows in a digital future.
Come on, John, I just think it works.
It works for Bruce.
We've beaten this to death.
Watch weekday mornings on Bloomberg Television.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, one of the biggest names in luxury fashion is going sustainable. Kering, the $110 billion owner of brands including Gucci, Balenciaga, and Alexander McQueen, has just released its new strategy to achieve a circular economy. Now, the company has laid out a series of targets. It wants to run off entirely renewable energy by 2022, stop use of single-use plastics by 2025, and eliminate microfiber leakage by the end of the next decade, or this decade. Well, let's bring in Marie-Claire Daveux. She is Chief Sustainability and Institutional Affairs Officer at Kering for the very latest. Marie-Claire, thank you so much for joining us. It's been way too long since we actually caught up. When you look at some of the ambitions of Kering, when you look at some of the ambitions in general in the luxury world, what's the driving force behind this? Is it consumers or shareholders?
I can tell you. So first, good morning, Francine, and thank you for the invitation. What is driving us? It's about the fact that François-Henri Pinault put sustainability at the heart of the strategy many years ago for ethics reasons and business reasons. But now what it's interesting to see is the fact that all our stakeholders are interested in sustainability. So from investors, financial analysts, but also our clients and our employees. And everyone now wants to know in details what a group like Kering is implementing in sustainability, so on the environmental side, but also on the social side.
Mike, how much pressures are you getting from shareholders? So, the role of financing, and we saw in the U.S., which, we thought would take maybe longer, investors really driving change. Now, this is a different story because it was with big oil, but how much of that will you feel pressure from shareholders on luxury?
So first, it's a good pressure, and personally, I'm very happy that the fact that the financial community and investors are taking into account sustainability, because if we want to change the paradigm, we will be able to do it only if we have the financial community involved. So very concretely at the level of Kering, we are doing what we call ESG roadshow. We start 2 years ago, and we present our sustainability commitments, but also, of course, our results, our challenges, and how we are working in details to our investors through this kind of roadshow. But also at each General Assembly, François-Henri Pinault asked me to do a kind of recap, an update about where we are in line with our strategy. And after, what I think it's also interesting, you mentioned United States, but also to see at the European level how much the things are changing with the taxonomy and all the regulations that is discussing right now.
Mike, can you give us an idea of actually, what the future of luxury looks like? So is it people buying less product, but to become more sustainable, or is it actually fabrics that are used that will be much more recyclable? Like, how do you see this advancing? Is it, secondhand things? How do you see the future of luxury through the lens of sustainability in 5 years?
So first, you won't have a luxury future without sustainability. Not only for the textile industry, but for all the luxury products, all the companies have really to put in their strategy. If we come back to our luxury sector, the clients will expect a matrix approach from the raw material to be sure that we are using the most sustainable. So it means also including upcycling raw materials, recycle raw materials, also for the process, and of course, to extend the life of our product. So I think the classical model, take, make, and waste is totally finished, and we are putting in place a virtuous circle where second hand is very interesting. That's why we took a part of an investment. We took an investment in Vestiaire Collective a few months ago at the level of Kering, because we think also that modern luxury, and certainly it's our chairman and CEO who is sharing that, it's really a luxury where you develop also the second hand.
Marie-Claire, I know you're, the Stella McCartney brand, which is really, matching everything on sustainability, is no longer part of the Kering umbrella. Do you think consumers will gravitate towards those kind of brands that really represent, the good of climate change, sustainability, or will they actually assume that every brand under your umbrella will be sustainable in the future?
So I think not only for the future, but we are implemented really a strong sustainability action plan. And I think, our client, our customer are very smart. So what they are doing, and it's all over the world, not only in Western countries, but really all over the world, they are asking questions. They want to have some evidence. And when I discuss with our people inside the boutiques, it's really interesting to see how many questions they have directly in comparison with a few years ago. And thanks also to the social media, they are really able to understand in details if a brand is only speaking about sustainability, or if the brand is really implementing environmental policies, social policies, and also innovation linked with that. But again, I think when you look at the kind of consumer we have, Gen Z and millennials, there is no option for a luxury brand. It's a duty to include sustainability. After the communication and marketing point of view, it's another story. CEOs and designers, they can do in link with the brand equity and how they want to communicate. But it's an absolute thing to include from the design until the end of life, sustainability for a brand. And it's what we try to really to implement every day inside our group.
Marie-Claire, thank you so much. A real pleasure to have you on the program again. Marie-Claire Daveux, Caring Chief Sustainability and Institutional Affairs Officer. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Sources have told Bloomberg that Credit Suisse executives ignored warnings from colleagues about troubled steel tycoon Sanjeev Gupta. Despite one unit blacklisting him, another channeled $1.2 billion of the client money to his businesses. The UK's Serious Fraud Office is now investigating Gupta. A spokesman for Gupta does deny any wrongdoing. Shares in JD Logistics climbed after its debut over in Hong Kong. The delivery arm of the e-commerce giant JD.com raised $3.2 billion in its IPO, the city's second largest this year. The firm says it will use the money to expand its network of more than 900 warehouses.
We will focus on business expansion and revenue growth for the next several years. Our net margin will keep improving in the long term. Frankly speaking, the focus for the next few years will still be growth.
And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, coming up, the UK's reopening could be delayed, according to Health Secretary Matt Hancock. That's due to the rapid spread of the virus variant that first emerged in India. We'll have the very latest next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the UK's reopening could hang in the balance because of the spread of the COVID variant that first emerged in India. That's after Health Secretary Matt Hancock said plans to relax restrictions on June 21st will only go ahead if it's safe. Now, COVID cases have picked up recently in the UK with a new variant blamed for about 3/4 of the infections. Now, despite this, a Lloyds Bank survey shows economic optimism in the UK at its highest level since 2016. Well, joining us to discuss all of this, Bloomberg's David Merritt. Good morning to you. David, so we're seeing an uptick actually in cases in the UK, largely due to this new variant. How much of a risk is this reopening going to be?
Well, it's a huge risk, Francine, and this was the thing that we were warned about all along after this roadmap was set out by the government, that at any moment a variant could come along that could knock things off track. We know with this variant first identified in India that it is clearly more transmissible, and as we learned yesterday, the majority of new cases being recorded in the UK are that variant. So the question is, can these hotspots where we're seeing it bubble up, can they be contained? If you look at the map of the UK as a whole, most of the country, the coronavirus infection levels are still very, very low. But in these hotspots, places like Bolton in the north of England, we are seeing this big uptick. And can that be contained? They're piling in with extra vaccinations. They're doing surge testing. And what the government told us yesterday is that it's at the moment too early to tell. They need about another week or two of data before they can decide about whether they can proceed with that crucial date on June the 21st.
David, what does that mean for the economy? So in the middle of all of this, economic confidence is actually pretty high.
That's right. I mean, if you just have to step outside the office here, you can see the streets are filling up, the restaurants are filling up. I went out for dinner last night. The restaurant was packed to the rafters. There's a real sense of the all-important service industry in the UK coming back to life. And people can see that the hospital numbers are low, that the infection numbers are low. Lots of people have had the vaccination. So confidence is clearly riding high. And at the moment, that isn't being knocked off balance by the worries about this variant. But of course, it wouldn't take much for those numbers to tick up further and for that date to get delayed. You know, all these big events we've got planned for the summer, things like the Euro Championships final at Wembley, things like music festivals, those are currently all scheduled to go ahead over the summer. If that opening date gets pushed out, a lot of these things are going to get cancelled, and you could expect confidence to take a big knock.
I can't find a booking for a restaurant, David, so well done for that as well. David Merritt there, our news director for EMEA, definitely more resourceful than I am. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins us out of Berlin, Kaylee Lyons in New York, and this is Bloomberg.
Traffic. Okay. During the pandemic, no traffic. Okay. Where do you see oil market in about 20 years or so? Non-existent.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
My judgment right now is that the recent inflation that we have seen will be temporary. It's not something that's endemic.
Central banks are probably showing more caution to the upside. They are prepared to wait longer because they are more confident that we have stable inflation expectations.
Bank of Japan's substantial monetary easing will continue even after the economic recovery from the pandemic is achieved.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kaylee Lyons.
Well, good morning, everyone, from London, Berlin, and New York on this Friday. It's Friday, May 28th. Our top stories today. Lessons from the Bank of Japan. We hear exclusively from the BOJ governor on the nation's long-standing battle with deflation. Biden's $6 trillion budget. The U.S. president is set to unveil a spending plan that would drastically increase federal spending in the coming years. His decade-long plan will be released today. And a tale of troubled tycoon. Credit Suisse executives ignored warnings about Sanjeev Gupta as they sent $1.2 billion of client cash to his business. I love that story because the key takeaway is always listen to your commodity trading desk. Kaylee, a lot going on in the markets because we're expecting, of course, that deficit or that budget plan from Biden. And then we had some pretty good news out of economic data yesterday.
And we have more economic data coming up at 8:30 a.m. Eastern time, Francine. PCE, the Fed's preferred inflation gauge we will be getting, so we're all going to keep an eye on that. And of course, it is the last trading day of May here in the U.S. and in the UK, considering we have holidays on Monday. As far as what the day looked like in the Asian session, it was broadly a positive one. The outperformance really coming from Japan, with the Nikkei up more than 2%, even as the Japanese government is looking at extending the state of emergency in cities like Tokyo. The underperformance was from China, stocks down by about 0.3%, but it isn't so much the stock story that is exciting in China. I'm paying attention to what's happening in foreign exchange, with the Chinese yuan stronger against the dollar yet again today. We're sitting at 6.3606 right now, and that's even after the PBOC set a weaker reference rate, a subtle sign that they maybe are going to try to rein in that rally. Speaking of trying to rein in rallies, we also know they're trying to do that in the commodity complex, especially with commodities like iron ore, which is down about 20% in the past couple weeks. We did see futures ticking up a bit today. Goldman Sachs, Jeff Curry, out with a note overnight saying that any dip is a buying opportunity because China's efforts are going to be in vain. As for what the picture looks like here in the U.S., it was the cyclicals that led the charge yesterday. Looks like that will be the case again today, with Dow futures outperforming, NASDAQ futures lagging a little bit, S&P E-minis up just about 15 points. Quiet in the Treasury market. We're sitting just around 1.6% on the 10-year. It is a mostly stronger dollar story today. And then, of course, cryptocurrencies, though, a little bit weaker on the day. Bitcoin is down about 7.3% below $36,000. I'm sorry, Matt, it's Friday.
You can see it on the Bloomberg.
You
so
can.
XBT currency
Thank you for
is
saving me.
the way to see Bitcoin in case you're new to this game. And by the way, CRYP Go, Crip Go, allows you to see a whole group of digital currencies. I want to quickly bring you the breaking news that we've got on the euro area. May economic confidence index, it's risen to 114.5 from 112.3. So economic confidence rises. Interestingly, euro area consumer confidence comes in still at a negative 5.1 reading, but we do have a gain in the economic confidence index, again to 114.5. In terms of European markets, you can see that we have green on the screen here, especially in Germany, but France, the Iberian Peninsula, the UK, all gaining today. It's interesting, if you look at the numbers, Germany is doing better. The DAX is doing better because of Siemens. A big gain, 3.5%, as the cyclicals in Europe especially rise. So Siemens supporting the DAX in Frankfurt there. And then I just put at the bottom the Turkish lira. Traders love to get in this game because there's so much volatility, and maybe not as much as in crypto, but the Turkish lira falling to the lowest level against the dollar in history. So the dollar can now buy more than 8.5 Turkish lira after another move by Erdogan to fire one of his central bankers. So that volatility continues, but the direction stays the same, Fran.
Yeah, and that's, of course, also weighed by U.S. yields. I mean, if you look at the markets, and it has been quite fun looking at, the various things that we should be looking at, Matt. So there is that economic data out of Europe. I mean, the one thing that also really caught my attention, I know, Kaylee worked 20 hours yesterday, so she was covering actually the testimonies from the banks. But for me, I actually listened to them and made the kids watch it because, if you're a bank chief executive of Wall Street, usually you're not a dummy, so anything you say is quite interesting. And I just thought it was amazing what...
But they've got to hear Congress at the same time, right? So does that balance it out? No? Okay, I always am stunned when I watch these hearings. It doesn't appear that everyone is fully informed about markets, economics, and finance. I feel like more people should be watching Bloomberg television. Maybe if you just had your kids watch Bloomberg all day, they would learn more than from congressional hearings.
Yeah, they'll be more fun at parties thanks to that. Now look at what's ahead today. The German Chancellor Angela Merkel and the Italian Prime Minister Mario Draghi are among the speakers at the Global Solutions Summit starting at 7 a.m. New York time. Following that, the UK Chancellor Rishi Sunak hosts a virtual meeting of G7 finance ministers and central bank governors ahead of the in-person June gathering. We'll get more economic data at 8:30 a.m. New York time with U.S. wholesale inventories, PC and personal income spending. And President Joe Biden is set to officially release the 2022 U.S. budget request. It is expected to be $6 trillion, according to documents cited by the New York Times. Now, for more on that story, let's get straight into the story with Kathleen Hunter, who's, of course, our U.S. editor here in Europe. Kathleen, when you look at $6 trillion, I mean, it's a pretty incredible figure.
It is. It's quite a large number, Fran. And I think the thing to remember is that this is a very aspirational budget document. Anytime a president releases his budget, it's aspirational, and this budget in particular. But I think what it does is it sends a strong signal from the White House that, the era of, having additional government spending, moving into more spending, even deficit spending, because you see $1.3 trillion in deficit spending in this budget, that's something that the Biden administration is embracing. And that goes hand in hand with what we've seen from the American Jobs Plan, the American Rescue Plan, these infrastructure proposals that Biden has put forward. And so I think it's in line with that, but, is it going anywhere in Congress? Absolutely not.
Kathleen, the rate of change to me seems pretty amazing, up to $6 trillion from $4 trillion. And I wonder if this kind of rate of change is going to scare off people in Congress.
Oh, absolutely. And I think even some Democrats, I think, particularly if we look at the Senate, which is divided 50-50, you see more moderate Democrats in the Senate, people like Joe Manchin. This is a very big number, and I think difficult potentially for them to even swallow. And so, of course, there's going to be a lot of talk about Biden's budget today, but really what it does is it kind of sets the table for the sort of economic policies we're going to see from this White House. But, when it comes to what Congress themselves do in terms of budget, because the next step would be for them to craft their own budget, I would imagine the number that they embrace is going to be significantly lower.
All right, Kathleen, thanks very much. Bloomberg's Kathleen Hunter covering the Hill for us. Now, we had a second day, speaking of congressional testimony from the CEOs of America's largest banks, as Francine pointed out. Overdraft fees are a huge problem for Congress. Racial equity audits are an issue. Cryptocurrencies came under the spotlight as well. Here's JP Morgan CEO Jamie Dimon being asked his views on key challenges ahead for the industry.
What do you see as the greatest threat to our financial system right now, and to your company as well?
Public policy not being properly executed in the United States of America, which means we may not be able to take leadership role in the world for the rest of our lives.
Okay, what does that mean exactly?
I think we've done public policy not particularly well when it comes to infrastructure, immigration, healthcare, taxation, regulation. We've stifled the formation of small business. American leadership really matters. And if we don't get our academic act together, we won't be a leader in 20 years.
Okay.
So some said that's Jamie Dimon being spicy. Others said he's speaking truth to power there. It was definitely my favorite interaction of the day. Sonali Basak, Bloomberg's Wall Street reporter, joins us now. And, you know, overall, Sonali, these hearings were pretty boring. It's the typical political theater that you see in Washington, just like the day before. But there were a couple of exciting back and forths.
Yeah, it was certainly a long 2 days, 7 hours worth of hearings for all of these bank CEOs. ESG did come up a lot, and I think one thing that was very interesting about it is that, remember, the Democrats fall in a very different space than the Republicans do when it comes to asking the banks to really engage in social issues. They were asked a lot about the pipelines that they finance, but they were also asked by Republican senators to not bend to some of these demands when it comes to financing the oil and gas industry and fossil fuels. So very complicated. I think it's very hard for the banks to figure out the course they should be taking when that all hasn't been sorted out on a congressional level. So that's one thing. There was also some new information, especially for banking reporters and people who watch the banks closely. The idea, for example, that Citigroup is rethinking a racial audit. Remember, that was a proposal that was shot down by investors, but 40% of investors still supported it. The racial audit proposal is something that Jamie Dimon had called bureaucracy and BS. Right. So where that goes in the future should be an interesting establishment.
Yeah, and of course, Jamie Dimon and Representative Al Green having an interesting exchange over race in the bank's history with slavery and collateral. Of course, Bloomberg, Sonali Basak, thank you so much. Let's turn now to the ongoing fallout over the collapse of Greensill Capital at Credit Suisse. Sources tell Bloomberg that the bank's executives ignored warnings from colleagues about troubled steel tycoon Sanjeev Gupta as they channeled $1.2 billion of client funds to his businesses. Let's get more from Bloomberg's Danny Berger. And Danny, yet again, the saga is not over.
It's certainly not. And this is really a fantastic scoop from our European banking team, including Donald Griffin. And Kaylee, the reason the story is so important is that it really just shows that Credit Suisse internally were raising concerns and risks about Greensill, but they went ahead with it anyway. So Gupta, you'll recall, as you mentioned, a steel tycoon. He gets funding from Greensill. And the commodities trade unit at Credit Suisse at one point starts to get suspicious. So they end up blacklisting Gupta in 2016, concerns that his dealings aren't legitimate. There's talk about shipping receipts being duplicated even. But then a year later, 2017, you have the asset management unit of the bank start to package funds. And those funds put together by Greensill and are linked to debt from Gupta. So then, stick with me here, you have the commodities unit going and warning about this, saying, hey, there's a risk, we've flagged this, we're not dealing with them. Despite all of that, the bank goes ahead with the plans. So potentially, and it turns out that they did put their clients at risk for something that had been flagged internally.
All right, Bloomberg's Danny Berger, great breakdown. Thank you so much. I do now want to take a quick check on some stocks moving in pre-market trading here in the U.S. And once again, the meme traders are back at it. They have been now for several days. And once again, that seems like it's going to be the case today because AMC is up 10% in pre-market trading, set for its 5th day of gains in a row. It is up more than 120% in just the last 4 days and more than 1,100% on a year-to-date basis. Pretty much everything else seems unexciting in comparison, but we do have some other stocks moving as well. One of them being Salesforce, moving to the upside after reporting results after the bell last night. Positive beat on the first quarter, second quarter guidance better than expected, and raised its full year forecast. The stock up 5% as a result. To the downside, though, we do have HP, which did report solid results, actually a beat and raise, but there's some concern that the strong PC demand that the company is benefiting from is going to start to slow down. And as a result, that stock down about 5.3% in early hours, Francine.
Yeah, so much going on. I mean, the meme stocks is a story that will run and run. So I know we're all on Reddit, or at least we try and be on Reddit to figure out what's next. Coming up, this is what's next, and I don't have to look at Reddit to know. It's Jeff Yu. He's BNY Mellon senior strategist for EMEA markets, and then a little bit later on geopolitics, but also on some of the budget in the U.S. Wolfgang Munchau. He's your intelligence director. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
The Fed emphasized that it would maintain a accommodative stance of monetary policy so that inflation averages 2% over time, and long-term inflation expectations are well anchored at around 2%. I think this policy stance is based on the recognition that it will take time to overcome low inflation once it is entrenched. As you know, this is also a lesson learned from Japan's experience of prolonged deflation.
Well, that was the Bank of Japan Governor Haruhiko Kuroda speaking exclusively to Bloomberg. Now joining us is Jeff Yu, BNY Mellon Senior Strategist for EMEA Markets. Jeff, first of all, thank you so much for joining us, and happy Friday. When you look at all the conversation around policy mistakes, what we heard from bank chief executives about possibly the economy in the U.S. overheating, what does a policy mistake today look like?
I think a policy mistake would be a communications mistake, because right now when you have markets just really hanging on to every word about tapering, about normalization, central bankers are saying, to suddenly inject volatility, to say maybe 3 weeks ago they weren't thinking about doing anything in the near future, and then suddenly you have a massive U-turn and then signal imminent tightening in a way that markets are not ready for, then that would be a communications error, and that would be a credibility issue as well.
Jeff, we've seen the reverse repo facility used at an astounding pace. A couple days ago, $430 billion. Then 2 days ago, over $455 billion. I think yesterday it was like $486 billion parked there for zero interest. What's going on?
What's going on is cash, and too much cash. And I think speaking as an employee of a custodian bank, that's something that all custodians are looking at as well. Just too much cash going everywhere, looking for a home. But taking a step back, I think, again, central bankers would need to look at the side effects. Do you want to have a process, or do you want to have a condition where there's just too much cash, not knowing where to go, and what are going to be some of the side effects? And then there's going to be spillovers and leakages into the system where perhaps the cash starts to go to places where it shouldn't be going, something the Chinese are trying to feature right now. And if we look at the market as a whole, these are comments about the side effects of policy on asset prices at large. I think it's going to be a massive issue up ahead.
Jeff, let's keep talking about asset prices, because it's the last trading day of May here in the U.S. And over the course of the month, asset prices largely have gone nowhere. The S&P 500 up 0.4%. Treasury yields moving lower by about a single basis point. What's going to break us out of this range-bound place we have been in for a while now?
I would go back to those comments about communication right now. So right now we're looking at Jackson Hole. Maybe there will be some commentary there, but let's look at where we are right now compared to 2 months ago, when markets were very concerned about a rise in real rates, a rise in nominal rates, which the market's not ready for. And now we have a massive stimulus impending, waiting to be announced, inevitably due to the issuance demands that could exert upside pressure on yields. Yet futures pointing to a good open in the US. So it seems like we're pretty relaxed about it right now. It just shows you how things can change, right? And now we're prepped for an upcoming move, potentially in tapering. So hopefully it won't be a volatile process either. But markets are waiting for the next round of communication from central bankers, especially the Fed.
Yeah, Jeff, what do you do with cryptocurrency? We ask you a lot, but actually there's been quite a lot of news on it. You know, does it go to 500,000?
Well, crypto, so again, it really will depend on what is its intrinsic value, and, you know, there will be different views on that. But ultimately, I certainly do think it will be linked to real yields, you know, the side effects that I talked about earlier. There will always be a role for technology like that. But if we believe in the correlation between easy monetary policy right now and just wider increases in asset classes, at some point, if global central bankers are willing to let real yields rise, then there may well be a cap in where these alternative assets can actually go.
Jeff, thanks so much. Jeff Yu there, BNY Mellon Senior Strategist for EMEA Markets. Now, coming up on Bloomberg Markets, Ralph Schlosstein. He is Evercore Co-Chief Executive Officer. We'll have plenty more, of course, on the markets and on inflation expectations. This is Bloomberg.
Bloomberg surveillance puts global markets into perspective.
We're going to try to fold an economic theory here with what we've got.
Based on data.
The focus is going to be on the data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends.
When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines in New York with Francine Lacqua in London and Matt Miller in Berlin. Now let's get the first word news. And the plan to end England's pandemic restrictions on June 21st is in doubt. That's according to Health Secretary Matt Hancock. He's warning that the COVID variant first found in India now makes up as many as 3/4 of all new cases. He says lifting the rules will only happen if it's safe. Nike says it ended its partnership with Neymar over the Brazilian soccer star's refusal to cooperate with an investigation into claims he sexually assaulted a company employee in 2016. The sportswear giant cut ties with Neymar last August, but didn't say why publicly. The athlete says the allegations are baseless. The Wall Street Journal says there were 8 years left on Nike's marketing contract with Neymar. There's another twist in the Gates divorce. When the pair announced their surprise split, they said there would be no changes to their $50 billion foundation. But now the boss of the philanthropic organization says he's looking at ways to strengthen its long-term sustainability and discussing what steps Bill and Melinda might take. He says no decisions have been made. And as we begin the Memorial Day weekend, gas prices in the United States are at their highest levels in 7 years. But experts don't expect the steep prices at the pumps to keep eager motorists off the road. After more than a year of caution during the pandemic, there's pent-up demand for travel. AAA estimates 37 million people will be on the move this weekend, up 60% from last year. And Francine, I'm just going to take this opportunity to rub it into Matt Miller that I get to be off for Memorial Day weekend on Monday. You are off for a bank holiday in the UK, and Matt will be working.
But Kaylee, we worked for
So
International
sad.
Women's Day, and Matt was
True.
off. We have a long
True.
Matt.
We honor International Women's Day here in Berlin.
We'll have plenty more in geopolitics next. This is Bloomberg.
closures and the complexities of COVID, it became apparent that if we could provide this course in South Australia, it would benefit trainees of anaesthesia in the state.
certainly feel like I've got some excellent skills to take away from the course, and I'm very grateful that it could be run in Adelaide.
Isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now, the market definitely focused on some of the economic data, Matt, but we're also looking at the meme stocks. I know we've been all over AMC trying to figure out what comes next. I think year to date it was gaining 1,150%.
Yeah, I had already quit Wall Street Bets, actually. I had signed up, during the first wave, but it became less interesting as they simply repeat the same stuff over and over again. But it's amazing the growth in AMC. I mean, it's more than a $10 billion market cap right now. It makes a little bit of sense if you think about it, right? Because as the economy opens up again, I mean, Kaylee, are you going to go to the movies anytime soon? I assume you're going to go to the theater.
Maybe. I won't rule it out as a possibility, Matt. But does that justify a $10 billion valuation?
Yeah, you know what? I haven't looked through the financials at AMC, but it seems like it's pretty high to me. Nonetheless, they operate a huge chain of movie theaters across North America, and Dave Wilson actually rented a theater. Our stocks editor, Dave Wilson, actually rented a whole theater at AMC and brought his family to the movies there.
Yeah, I don't know whether if it's just a meme stock or on fundamentals. We'll dig deeper. Kaylee, away from the meme stocks, what are you seeing in the markets?
Well, broadly speaking, it is a positive day, Francine. The last trading day here in the U.S. and the U.K. for the month of May. In Europe, not the case, but we are looking at a fresh record high on the Stock 600 with its gain of about 0.5%. Here in the U.S., futures pointing to a positive open. We're up about 15 points on S&P E-minis. Quiet in the Treasury market. That reflation theme may be taking a little bit of a break, though the cyclicals still seem to be outperforming in the equity market. We're sitting just shy of 1.61% on the U.S. 10-year yield. And the Bloomberg Galaxy Crypto Index, as we see Bitcoin falling and other coins falling, is down by about 10.4%. A relatively large move, though relative, of course, is a relative term in the crypto space. No surprise with crypto moving lower. We are seeing some stocks tied to it under pressure in pre-market trading. Coinbase is down about 4%. Marathon Digital by more than 6%. Some positive stories as well, though. Yext reporting results yesterday. It had a strong quarter, and shares are up about 9% as a result. And of course, I have to mention AMC again. Matt, I've thought about it a little more in the past couple of minutes, and I am craving some movie theater popcorn, so maybe I will be going to the movies. And clearly, Reddit traders think other people will be too. That stock up 10.5% in early hours.
When is the new Top Gun? When is Top Gun 2 going to finally come out?
In the fall?
In the fall. And you're going to go to that, right? I mean, you'll see that right away.
Absolutely.
I cannot wait.
And James Bond.
For some Tom Cruise action. Listen, I've got a really cool chart that it's the kind of chart I rarely get to show. So I want to take advantage right now. And for our listeners on London DAB Digital Radio, we welcome you. All I have to do is describe this and you're going to know what I'm talking about. The rotation into European stocks has been pretty amazing. And now I can show something that I haven't seen since I've been here. I moved here in 2016 and never seen European stocks outperform the rest of the world. What we're seeing is just a chart of this year, the year-to-date 2021, and it shows the Stocks Europe 600, our broad benchmark, outperforming the S&P 500, just barely, the MSCI Emerging Markets, MSCI Asia Pacific by a lot. So Europe really taking the lead here, Francine, as investors rotate into what they see as more valuable stocks.
Yeah, I love some of that positioning out there, and it's a great spaghetti chart, but actually readable. Now, more from our exclusive interview with the Bank of Japan Governor, Haruhiko Kuroda. Now, he discussed Japan's long-standing battle with deflation.
I think the discussion regarding a possible surge in inflation is particularly relevant to the United States. The Fed emphasized that it would maintain a accommodative stance of monetary policy so that inflation averages 2% over time, and long-term inflation expectations are well anchored at around 2%. I think this policy stance is based on the recognition that it will take time to overcome low inflation once it is entrenched. As you know, this is also a lesson learned from Japan's experience of prolonged deflation. That said, of course, it is true that central banks around the world have been conducted monetary policy while facing significant uncertainties due to the shock of COVID-19. In this situation, I think the appropriate conduct of monetary policy and effective communication are important in terms of ensuring market stability.
Well, that was Governor Kuroda speaking with our reporter in Japan. Now, Laura Cooper, Bloomberg MLive macro strategist, joins us. Laura, are there any kinds of advice that actually the U.S. and Europe can take from Governor Kuroda?
Well, I certainly do think the Fed is taking some guidance in terms of what the Bank of Japan has struggled to do in the past, and that is changing their average inflation targeting to try to overheat the economy to spur those price pressures. Now, clearly at this point, I do think that there are material differences between Japan and the U.S. As we know, Japan has struggled with deflationary pressures for 15 years. They do have that weak demographic backdrop, struggling productivity, whereas in the U.S., I think part of that fiscal impulse, the reason why they want to have trillions in spending, is in part to spur some of those productivity gains and feed into inflation. So the Fed is learning, but it will be interesting to see can they generate those price pressures without falling too far behind the curve.
Laura, we talk about the Fed's purchases a lot on this program, not as much about the ECB, but they're still trying to rev up the engine here as well. When are they going to talk about tapering?
Well, and that's really been what's been quite interesting actually this week, and it kicked off last Friday with Christine Lagarde really putting in some caution into these markets that were largely prepared for the ECB to start to slow those pandemic emergency purchases in June. That is looking less to be the case these days because we are seeing a growing chorus of ECB members warning about the struggles in generating that upside inflation, and they are worried about the rise in yields. So just looking so far this quarter, we have seen German Bund yields, those 10-year yields, climb about 15 basis points. Italy is more than double that, whereas the U.S. yields have really steadied. So this is largely about that European recovery story. But I think the real challenge going forward for the ECB is can they really step in to curb what is actually reflecting improving growth prospects here on the continent?
Bringing it back to the U.S., Laura, we of course get the Fed's preferred inflation gauge, PCE data, coming up later on this morning. If the Fed is insistent on looking through it for the time being because it's going to be noisy and we have base effects, all of that good stuff, is the market also going to look through it, or could it be a catalyst?
Well, and that really is the key question facing markets. And we did have Janet Yellen come out yesterday, kind of hint to markets that, look, these price pressures could be longer lasting. They could last through the year end. So right now, the fact that U.S. Treasury yields are trading relatively sideways, break-even rates have come off their recent peaks, does suggest that markets are comfortable in the Fed's current messaging. But the more that we get these upside prints on a sustained basis, we also have that U.S. payrolls print next Friday. So those are potential catalysts that we could see markets begin to question, why are rates so low against this strong economic backdrop?
Laura, thank you so much. Laura Cooper there from our MLive team. Now, coming up on Bloomberg Radio, more on geopolitics with Admiral James Stavridis. He is a Bloomberg opinion columnist and former Supreme Allied Commander at NATO. That's at 9 a.m. in New York, 2 p.m. in London, and this is Bloomberg.
generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Well, this is Bloomberg Surveillance Early Edition. I'm Francine Lachman, London, with Matt Miller in Berlin, Kaylee Lyons in New York. Now, Western leaders have criticized the Belarusian government after it forced a Ryanair jet to land on Sunday and arrested a journalist on board. Some airlines are now avoiding Belarusian airspace in protest as the EU weighs new sanctions against the country while Russia sticks by its ally. Well, Gitanas Nausėda, the Lithuanian president, has condemned the Belarusian government actions.
What is happening after the events of last weekend? We should treat this nuclear power plant, this facility, not only as unsafe source of generating electricity, but also as a geopolitical weapon in the hands of the dictator Lukashenko.
Well, joining us for more on the situation is Wolfgang Munchau. He's your intelligence director. Wolfgang, you're a great student, of course, of foreign policy. And you understand, I guess, the tensions between Russia and Europe more than most. We were speaking with the Lithuanian president a short while ago, and he also says that this is actually just a play for Vladimir Putin to try and annex or take over Belarus. Is that what the case is?
I think he's right. I may not use the word annex, but what Russia and Belarus are very likely to move towards is a form of political union between the two. It won't be a sudden annexation as with the Crimea, but it will be a process that will take place over a period of time. And my sense or my fear is that the Western sanctions, the sanctions the EU has not yet decided on, but it is now preparing, that this might actually accelerate the process.
So this is because Belarus is growing more isolated. But do you think that the EU, Wolfgang, will actually put many more sanctions? So if they start talking about sanctions or freezing Belarus out of the payment system, about financial stock market sanctions, does Belarus wake up and take notice, or do they just get closer to Putin?
The EU, as I was looking at some of the data, the EU accounts for about 18% of the trade with Belarus. The UK is quite actually is sort of also a very large trading partner, actually larger than any individual EU country. But more than 50% of their existing trade is with Russia. So if the EU imposes sanctions, and you mentioned cutting them off from the payment system, that is obviously the most extreme sanction economic sanction we can impose. We never imposed it on Russia, for example. But if we imposed it on Belarus, we would drive them in the arms of Putin, and it would accelerate the process of political union. So this will be on the mind of leaders, of EU leaders. So they will tread carefully. That argument will come up in the debates. I'm sure that Germany will make that argument to say, let's be careful. This is not about trying to be soft on Belarus, but we don't want to start a process that might, in the end, have the very opposite effect of what we intend to do, because we obviously would like to support the democracy movement in Belarus. This is clearly an EU interest, and a full-blown economic sanction may not achieve that. Now, you could argue that sanctions might encourage regime change. That is sort of one of the arguments in favor of economic sanctions in general. But in this case, it might not do that. It might actually have the very opposite effect.
Wolfgang, we spoke with Ann Applebaum of the Johns Hopkins School of Advanced International Studies last week, I believe, or earlier this week. And she was adamant that we keep Belarus and Russia separate. That is to say, the West's response to Belarus separate from how we deal with Vladimir Putin. And it makes sense if you consider it in those terms. We don't want to push the two together. On the other hand, can we really justify a German pipeline to Russia at a time when Putin is acting like an autocratic dictator? Can Berlin really get ready to funnel billions and billions of euros into Putin's coffers?
I completely agree with your implied point that we can't. The best way for Germany would be to put on pressure on Russia through the pipeline and other projects. I mean, Germany is a very important trading partner, and once the pipeline is operational, Germany's pull over Russia will greatly diminish. On the contrary, it will be Russia will have a pull on Germany by Germany's energy dependence on Russia. So the best strategy would be for now to put on pressure on Lukashenko to help the democracy movement, and also to put on pressure on Russia to say that if you move into any sort of annexation of Belarus or any Russian involvement, we will actually consider cutting the pipeline. That would be the response that I would recommend. I think, however, Germany is so committed to the pipeline politically across the political spectrum, with the exception of the Green Party. There is such a tremendous support for it that I don't think that Germany would use the pipeline as a bargaining tool in this Belarus conflict. So Germany will try to separate these issues, and herein I see danger that we ultimately. We think Belarus is small. We think we can impose sanctions. We always impose sanctions on small countries. Large countries are very different. We have a very different view on China and on Russia. But small countries, we pull our muscles, and then we may realize, there may be unintended consequences.
Wolfgang, this is Kaylee in New York. Of course, President Biden, the U.S. president, and Putin are set to have a summit in Geneva on June 16th. We're about 2.5 weeks away. How does this episode set the stage for that?
I mean, I'm hearing from Moscow that there is sort of a sense that, if Putin has to make concessions, he is more likely to make concessions over Belarus than over Ukraine. Ukraine being a strategically more important issue for him than Belarus. And there are a lot of people in Russia and the Russian, policy establishment who are just as appalled about Lukashenko as we are, and who don't see him as a good ally. They are embarrassed by him. And Putin has said himself that Lukashenko obviously seems to have lost the support of his own people. So that Putin's enthusiasm to support him and prep him up is clearly limited. But this, Putin may very well play a different game. But yes, I agree that the Biden talks are critical, because this is an area where Putin could make a concession to say, okay, we're gonna let you do whatever you need to do in Belarus for as long as our security interests are observed. And don't remember, there is the bit of Russia and Kaliningrad. This is sort of an enclave of Russia that is linked by a sort of a 60-kilometer gap to Belarus, and this is the Polish-Lithuanian border. And a political union between Belarus and Russia would basically means that there's a very small EU corridor that cuts sort of right across Russia. So that's another potential geopolitical source of instability, and so this is something this is a potentially serious issue where very careful diplomacy on all sides is absolutely essential.
Wolfgang, thanks so much, as always. Wolfgang Munchau, their Eurointelligence Director. Now, coming up, prepare for runaway inflation. That's the view from David Booth, after whom the Chicago Booth School is named. Part of our interview is coming up shortly. This is Bloomberg.
power of Bloomberg. First on news.
Headlines crossing from Morgan Stanley to management shakeup, planning for transition in 3 years potentially.
This is a huge move over at JP Morgan. It is a shock, of course, to the market.
First on earnings.
Apple, a big beat, well ahead of the 33% increase in revenue.
First on markets.
The capitulation phase is by.
The power of the Bloomberg terminal. The power of Bloomberg television and radio. Bloomberg has it covered.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I think you want to be sensitive to the idea that inflation could take off. Of people talking about inflation, I don't see too many of them saying, I really am confident I know where inflation's going. There are a lot of opinions floating around, and that's really the point. I mean, it's you can't forecast these things, and even if you could forecast where inflation is, you don't know what the effect's going to be on the stock and bond markets.
Dimensional Advisors Fund founder and executive chairman David Booth speaking there with David Weston. You can catch that full interview tonight on Wall Street Week. That's at 6 p.m. in New York, 11 p.m. in London. Now, Tom Keene, co-anchor of Bloomberg Surveillance, joins us. Tom, I know you're looking at, I know we used to talk about Lira day in, day out. And actually, there's quite a lot of movements of executives being booted out of the central bank. And that's, of course, having an impact on Lira.
Well, a 15% depreciation off the chaos at the central bank, but maybe a longer-term picture is in order, Francine. The chart's real simple. This is synthetic euro, not dollar. We look at Lira as dollar-lira, U.S. dollar relationship with Turkey, but so much of their trade is to the west, to Europe, and this is euro-lira. We rarely look at this, Francine. And what's important about this chart is a big red circle right in the middle. That's when Mr. Erdogan took over, roughly 2003, and he staunched the mass depreciation of the euro. It's depreciated 99% in 40 years, 15% in the recent chaos, and 82% since the advent, I should say, of the Erdogan era.
It is pretty incredible, Tom, to see an all-time low against the U.S. dollar, but it's also not helped because it's weighed down by rising U.S. yields.
Yeah, I would say the rising U.S. yield dynamic is there. What all of this is about is a country that has struggled, really going back to Ataturk in 1923, and there's been ebb and flow. And Mr. Erdogan, we really need to remind ourselves with all the political economics right now, Francine, this is a guy who was celebrated for stabilizing the Turkish economy, I'm going to say 03, 04, 05, maybe into 06, and then it's unraveled a number of times.
Yeah, Tom, thank you so much. Tom Keene, of course, and the surveillance team all over Turkish Lira. Tom, I need to call you later. I need some puppy help. Like, I have questions about how often you bathe them and stuff like that.
Well,
that's another conversation.
The forged gin is a balanced gin.
I should have called the, fur baby gin. Thank you, Tom. Here's what else we're looking at today. And Kaylee, I know you're looking at economic data.
I am, and every time I look at economic data, you distract me with conversation about puppies, but I digress. PCE data, 8:30 a.m. Eastern time. Why do we care? Because this is the one the Fed watches. We're looking for growth of about 2.9% on a year-on-year basis. We'll see if we get any kind of upside surprise, and then if an upside surprise matters to the market or it, like the Fed, is going to look through it, Matt.
Yeah, very important to watch PCE, core PCE there. I'm watching MotoGP this weekend, along with probably 300 million other people around the world. Jack Miller for Ducati has won 2 races on the trot, and now that they're coming basically home for Ducati to Mugello for the Italian Grand Prix, we'll see if the Australian rider can do it again.
You mentioned Jack. I talked about puppies. It's a subliminal message for you,
Lay it on every day.
Meanwhile, the Citigroup chief executive, Jane Fraser, also banned video calls on Friday, and today it's reset day, so Citigroup employees have a day off. Happy weekend.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
What investors need to differentiate between is, first, where are we in the cycle? Second, what's the direction of the economy?
People are vaccinated and they're still not ready to get up and go and do things the way they did them before.
Quite frankly, no one really seems to believe that inflation is going to be anything but transitory.
What the Fed's objective right now is managing expectations, and they're doing a great job with that.
For as long as you keep interest rates at close to zero, you're distorting everything in capital markets.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene is simulcast Bloomberg Television and Bloomberg Radio. John Farrow off on a Memorial Day. He's British, but he's off on Memorial Day. What is that about? Lisa Abramowitz with us, and joining us from Berlin, the American Matthew Miller. Matt, thank you for doing yeoman's duty with us this morning as well. How is the military holidays, Matt, celebrated in Germany? What's their Memorial Day equivalent?
We don't obviously have these kind of military holidays in Germany.
Exactly.
The military isn't revered the same way it is in the U.S.
It is very, very different, but we're thrilled to have you with us in some important European perspective this morning. Lisa Abramowitz, I look at this, and what I see in the budget of $6 trillion is back to World War II, back to World War II. It is a seismic shift, the Biden proposal.
Right. Joe Biden's going to be releasing at 1:30 p.m. That's the expectation, this $6 trillion spending plan. Goldman Sachs expects it to get reduced to $3 trillion. We are talking, though, about a seismic shift, and arguably, I would say, even more important than this is the Green Book. Basically, the tax proposals that are going to accompany this also are going to be outlined today. How much is our tax regime going to change in a way that it hasn't for decades?
Yeah, we'll have some look at James Dimon commenting on that as well, particularly on the capital gains look back, I believe, to April. In the markets this morning, Lisa Abramowitz, I mean, it's into the mid-year, and the consistent theme is that bid to the equity markets, the VIX, under 17.
And frankly, Tom, you've been on this all week. It's the amount of cash in the system. Yes, it's the recovery, but there's also so much cash. I mean, have you moved out of your triple leverage cash yet?
Yeah, well, it's going to be interesting as well. We'll show a chart later here on the overnight repos, the mountain of cash that's up there as well. Matt Miller, I look at the market right now, and across asset, I've got futures up 17, Dow futures up 183. Matt, we do the Dow futures when John Farrow's not here. It's an ancient tradition, and the VIX under 16.67. Matt, what do you see in the currency market?
Well, the lira, I have been watching obviously very closely ever since Erdogan fired his most recent central banker. But I think you made a great point on our program today. It's really not the dollar lira that's important to people in Turkey working in the local economy. It's the euro lira that they watch so closely because that's where the bulk of their trade is done. And it's a very different looking chart.
It's a very, well, 8.57 on dollar lira, and it's a 10 handle now on euro lira. All you need to know is 82% depreciation in the Erdogan era as well. The one thing I'd look at as well is stability within the bond market. The yield there in the 10-year yield, 1.61%. Lisa, your thoughts on this Friday?
Well, that's the interesting thing is actually the stability in the 10-year yield. I find this fascinating, including that 7-year auction yesterday that came out really, really strongly. People want to buy bonds even as the U.S. deficit continues to increase. And even though signs of inflation are still strong, today I'm really watching the 8:30 a.m. data dump. We're going to be getting personal income, personal spending, and that core PCE deflator. This is the key metric of inflation that the Federal Reserve watches. How much has it increased? The expectation is for the biggest year-over-year increase going back to the early 1990s. Transitory. Are we going to keep talking about this? At what point does this get the Fed's attention? Then at 10 a.m., the other aspect of inflation is consumer expectations. We get the University of Michigan May Consumer Sentiment Index. Again, I am keying in on inflation. We saw that inflation expectations surge in the last reading. How much is this continuing to increase and how much is it crimping the outlook for consumers going forward? And then today, we're expecting it around 1:30 p.m. President Biden is unveiling the $6 trillion spending plan. We're also going to be getting this green book outlining the taxes that may accompany it. Goldman Sachs pointing out it's strange that it's coming out at 1:30 p.m. before a holiday weekend when normally these budgets are put out on a Monday morning so that everyone can hash it out. Hard to know exactly what this means, except that it is unlikely that it will get passed as a $6 trillion plan.
Headline out right now on HSBC, Lisa and Matt. HSBC, and of course this off retail banking exit yesterday in America. The Hong Kong and Shanghai Banking Corporation says clearly still in, quote, difficult and challenging times. That from the HSBC chairman. Before we get to Mickey Levy and an arch discussion of inflation, and he's a wonderful guest to speak to, I want to go to Matt Miller in Berlin about the ancient tenor in Germany of fear of inflation. Matt Miller, you and your important interviews have heard this. I've heard it from Mr. Weber at UBS. I've heard it from the giant Otmar Issing, who led ECB economics ago. Within the tone of Germany right now, is there a generational shift? Is there less of that ancient fear of inflation?
I actually think there is. You know, Lisa mentioned a seismic shift, a sea change in the U.S. from the 40-year era of Reaganomics really into this new Biden budget. We see a little bit of a shift here as well. Olaf Scholz, who is running for chancellor in the Social Democratic Party, he had been steadfast in sticking to what they call the black zero here, not wanting any debt, not wanting any extra spending. And now that tone in his interview earlier this week on Bloomberg Television has changed. They're really willing to do the extra borrowing and to do the extra spending they need to dig Germany out of this crisis.
There is a change in America as well, and we are thrilled to bring you Mickey Levy this morning with Berenberg Capital Markets, and of course his tenure at Bank of America over the years noted. And far more important, Dr. Levy, you and others, including the giant Alan Meltzer, really concerned over time that someday out there would be inflation. Is there someday out there on inflation now?
Yes. So we're not going back to the 1970s, but it's just so clear that this is more than temporary. Yes, we're having a temporary spike because of the year-over-year measured from last spring, but all you need to do is look at the acceleration in economic growth, and if it is continued, that means that aggregate demand relative to supply or relative to capacity, that is all you need for businesses to raise prices and maintain their margins. So everything is in place for inflation to rise. And I think it's going to rise significantly enough to make the Fed uncomfortable. And when the Fed is uncomfortable, we'll have to see how the markets respond. But once again, all of the factors are in place for higher inflation. And I just point out, we've never had so much monetary and fiscal stimulus, and the Fed and others are saying, "Oh, but look what happened after the financial crisis. We did QE and we did zero rates, and it didn't generate higher inflation. It stayed subdued. So the same thing's going to happen." And they're just fighting the old battle. And I think people are going to be, including the Fed, are going to be surprised that this temporary inflation is going to quickly evolve into a trend higher inflation.
Mickey, a lot of people have come on this show and talked about we'll only know that inflation is increasing in a more sustainable fashion later in the year as we get to some of that data. Given that, how do you frame out the information we're going to be getting in 2.5 hours? In other words, how do you look at all of the data in between now and months from now?
Well, Lisa, that's a great point because time will tell. But so I'm just expecting that the PECE price index, either this month or in coming months, they're going to surprise to the upside. So once again, think about the following: unprecedented amount of monetary and fiscal stimulus. Aggregate demand is accelerating. That is, business top line revenue growth is accelerating. The extraordinarily easy money has contributed significantly to this boost in commodity prices, materials prices, even wages are going up. And so what are businesses doing when they face significantly higher production costs? Well, with the strong aggregate demand, they have the flexibility to raise prices, and we're seeing anecdotal evidence of it. And so I just expect inflation is going to surprise to the upside. And the critical issue here is, when will the Fed come around and acknowledge, well, maybe it's not just temporary? And then how will they respond? And in fact, it is a guessing game, because when the Fed changed its strategic plan and said, we prioritize, maximum inclusive employment, and we want inflation to go above 2%, but we're not going to tell you what range we're comfortable with. So the Fed's left us in this environment of, it's a guessing game. And
Mickey, they have to know. They have to, when I talk to the CEOs here of Daimler, of BMW, of Volkswagen, of Siemens, they all tell me that they're raising prices. They have higher input costs. They need to pass that on, and they're even padding margins a little bit. So they're raising them more than they need to. The Fed has to know this. Is it possible the central bank is willing to let inflation run a little more as they see these huge debts amass in America? I mean, that would be one way to sort of work them down, wouldn't it?
Well, I mean, once again, great point. I mean, the way the U.S. Reduced debt burdens following World War II was a combination of sustained growth and higher inflation. And that reduced the debt to GDP ratio over a generation and a half. This time, there's no question but that the Fed wants higher inflation, but it also wants to anchor inflationary expectations to 2%. And, we have seen a modest move up in inflationary expectations, but I think the Fed is missing a broader point talking about this temporary. The reason why they want higher inflation is a catch-up from recent years and to lift inflationary expectations. But their whole concern about inflationary expectations imploding and facing the zero bound, that's the old battle. It's not the battle now. And so I think the whole notion that, increasing inflation now is going to improve economic performance, I just don't see it.
Okay,
and to your point, if you were a business and you saw strong product demand and constraints in supply, you'd be increasing prices.
Mickey, we got to leave it there. We're out of time. But Dr. Levy, thank you so much. Here with a challenged inflation outlook. He is with Berenberg Capital. Coming up, we're going to drive forward this conversation, but bring it over to the markets and particularly to commodities. Edward Morse of Citigroup, yes, on oil, but far more Edward Morse on ascendant China and ascendant copper. Futures up 15 on this Memorial Day Friday. This is Bloomberg. Good morning.
With the First Word News, I'm Rishka Gupta. Senate Republicans are poised to block the creation of a special commission to study the deadly January 6th attack on the Capitol, whilst initially saying he was open to the idea of the commission, which would be modeled after an investigation of the 9/11 terrorist attack. Senate Republican leader Mitch McConnell turned firmly against it in recent days. The bill passed the House earlier this month. U.S. climate envoy John Kerry will join climate talks in South Korea next week. He's one of the nearly 50 world leaders and envoys who will take part in the Partnering for Green Growth and Global Goals Summit, known as P4G. They're hoping to lay the groundwork for new agreements at the COP26 talks in Glasgow in November, where signatory countries are expected to boost pledges to help achieve the Paris Agreement goals. Singapore is pledging $605 million in additional support for businesses and individuals affected by new virus restrictions. The nation is seeing an uptick in COVID-19 cases. That's prompted officials to reimpose some lockdown measures. Singapore's economy, which depends heavily on travel and services, has been hit hard by the pandemic. And as we begin the Memorial Day weekend, gas prices in the United States are at their highest levels in 7 years, but experts don't expect the steep prices at the pumps to keep eager motorists off the road. After more than a year of caution during the pandemic, there's pent-up demand for travel. AAA estimates 37 million people will be on the move this weekend, up 60% from last year. Global News 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
Prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated